Ladies and gentlemen, let me get your attention. Good morning to everybody who's here at the Army-Navy Club, and welcome to the Arab Gulf States Institute's 11th Annual Petro Diplomacy Conference. I also want to welcome everybody who's joining us online. I'm Doug Silliman, the president of AGSI, and for the past 10 years, AGSI's Petro Diplomacy conferences have covered not just oil and gas and energy developments, but also how geopolitics intersects with energy and affects energy, and vice versa. Now, this year, political and security events are playing a significant role in energy, and I think we're going to have an interesting conversation about the intersection of our traditional energy topics and the geopolitical topics. Now, as we conceived and planned for this year's conference, we wanted to capture the evolving role of the Gulf Arab states in energy markets and whether and how their future economic priorities, energy priorities, and development plans might be changing. We wanted to ask questions like, what is the priority that Gulf governments are placing on continued development of hydrocarbons as opposed to renewable sources, nuclear energy, energy efficiency, carbon capture and storage, and other new technologies? How can IOCs, big ones, small ones, take advantage of any changing priorities in the Gulf? And we're definitely going to take these questions head on in the discussion today. In our initial keynote presentation and our second and third panels, we'll absolutely talk about these topics. But since we are the Petro Diplomacy Conference, we're also going to tackle the current uncertainty geopolitically in the region, Israel's attacks on Iran, America's attacks on Iran, Iran's attacks on Israel, and whether or not there's actually a ceasefire that's in force at the moment, and that will probably change a couple of times during the course of today's conference. But will the crisis slow or redirect government or foreign direct investment into energy and other projects in the Gulf? Are Gulf governments comfortable continuing with their vision plans, their renewable energy and development plans, under this cloud of going back and forth between conflict and uncertainty? And what impact will the uncertainty in the region have on future plans to invest and develop energy? And what impact will that have on American and Western private sector looking to do business in the Gulf? Now, we've got a whole day to cover these topics. We've got a lot of really smart people in the room, and there are many opportunities today for offline discussions and networking throughout the day, and a lot of coffee and tea outside here just around the corner. So don't sit back and enjoy. I want everybody leaning forward. I want you in this conversation. I want you to contradict something that you hear from someone else around the table and offer new views and your own personal experiences wherever you get them. While we are unlikely to solve any big problems at the conference today, I am certain that we will give you, as business people, as analysts, as academics, as diplomats, as journalists, ample opportunity to expand your knowledge of these crucial issues and find ways to use that knowledge in your daily work. Now, before we get started more formally, I want to recognize and thank our sponsors for today's Petro Diplomacy Conference, Genel Energy, Paul Weir, and Gulf Sands. This conference could not have been possible without their generous support and participation in the conference. I also want to note that today's conference is on the record. It is being broadcast on AGSI's YouTube channel, so watch your language, get your facts straight, and always be polite. Now, the most important details of the entire conference come next, so please be attentive. The bathrooms are kind of hard to find here at the Army-Navy Club. You go out these doors, the second hallway on the right, just past the portrait of General Meyer, hang a right, and you will find them quickly. So try not to wander around the second floor of the club for too long, you may get lost. Secondly, and also very important, about every third chair down the hallway here, we've got a microphone. Only 4 microphones can work at a time. And if you want to speak, when you are recognized to speak, you press the button, the face of a person speaking. A red light will come on, the red light will come on the microphone, and you can speak. Most importantly, when you're finished making your point or asking your question, please turn it off to permit other people to speak as well. Third, you will see at several places along the table the Wi-Fi address and code if you need to use Wi-Fi today. So with all the really important information for the conference already finished, I want to get started with our morning keynote session. The speaker for our keynote is Paul Weir, the CEO of Genel Energy. Paul joined Genel in 2020 after working more than 30 years in upstream exploration and production in the North Sea, in Southeast Asia, and in Africa, with, among other companies, Tullow Oil, Talisman, Nippon Oil, Occidental, and Total. And he holds an MBA in oil and gas management from Robert Gordon University in Aberdeen, Scotland. So, Paul, welcome to Washington. Your first trip here, I understand. We arranged the weather just for you.
Thanks, sir.
Moderating this discussion with Paul will be Kate Durian. Kate is a non-resident fellow with AGSI and, frankly, the person most responsible for putting together the substance as we organized Petro Diplomacy conferences going back several years. So, Kate, as always, many, many thanks for your input. She's a contributing editor at the Middle East Economic Survey and a fellow at the Energy Institute, and has served as the Middle East and Gulf Manager at the World Energy Council and the Middle East Program Officer for the IEA, and started her career as a correspondent for Reuters and AP and maybe others as well, and has probably best stories from that part of her career. So, Paul, Kate, let me hand the floor to you. Turn off my microphone properly, and let's just start the discussion.
Yes, I'll start first. Where is this thing?
That one there. That one. I don't know where
They make it really complicated. I think it's whiplash from everything that's going on. And I'm, after 10 years of doing this, I'm always really pleased that we get the quality of speakers that we get every single year and the attendance here. And Paul, everybody says that Iraq is sort of like in the middle of all of this, the weakest link of this in the neighborhood, and you operate there. So I'm going to let you start and tell us exactly what Genel does. I know what they do because I've been involved in this for a very long time, and how it's affecting your operations. But let's hear about Genel Energy and what you're doing in Iraqi Kurdistan and in Oman, which is a new area for you.
Thank you, Kate, and thank you, Doug. Good morning, ladies and gentlemen. I'd like to start by expressing my sincere thanks to Ambassador Stillman and his colleagues at the Arab Gulf States Institute for their generous invitation to the conference and to a speaking slot. I did some background reading on the conference before first speaking to the Ambassador earlier this year, and I was struck by the impressive list of political figures, senior academics, senior civil servants and ambassadorial staff, consultants, advisors, think tankers and other serious thinkers on the attendees list, and I expressed a concern to Doug that a simple oil man, a term that I still use with pride, might not fit in, might seem a little out of place. The analogy I think I used at the time was that of a gardener in dungarees accidentally stumbling into the marquee at a high society wedding. Doug understood the point and was very kind. He assured me that we would be made very welcome, and we have, and that it might actually be very helpful for this conference to hear from folks that actually had some dirt under their fingernails. His words, I think, not mine. So here I am, dirty fingernails and all. In actual fact, as recently as breakfast this morning, I've been assured that there are at least 10 and maybe as many as 11 or 12 people in this very room that have actually done an honest day's work in their lives. So now I feel much better about the whole thing. I appreciate that many of you are now going to spend the rest of my slot trying to figure out who the workers are. So be it. Good luck. As you've heard, my name is Paul Weir. I'm Chief Executive of an upstream oil and gas company called Genel Energy. Genel is a medium-sized independent, listed and headquartered in London, that has business interests in some of the Arab Gulf states. My short presentation today aims to introduce Genel and something of its investment selection method, and then lay out the key characteristics of a very attractive jurisdiction within the Arab Gulf states, and then, by gentle comparison and a little implication, illustrate what can make life more difficult for smaller international oil companies working elsewhere in the region. Smaller companies like ours are important for developing economies, but we're often less resilient in the face of some of the challenges that we face. I should point out right at the start of this presentation that it was prepared before most recent developments in the Middle East, and like all of you and just about everyone else, Guinea and its Kurdistan peers are studying what's going on between Israel and Iran, and now perhaps with United States involvement too, with some trepidation and more than a little concern. This presentation does not make reference to that new conflict, and it probably doesn't need to land the points that we hope to land. I accept, of course, that the challenges Guinea faces as a business pale when compared to what's unfolding before us in the Middle East today. I am also acutely aware that I'm talking as an oil and gas guy about a region and operating environments within that region to a group of people that are almost certainly more familiar with the geography and the political dynamic than I am. For many of you, studying and understanding the Gulf is your job, and one that you're great at, I'm sure. And in that regard, I'm sort of preaching a rather amateurish sermon to the choir. Apologies for that. I hope you'll find something interesting in what follows and in the perspective of a small oil company. The purpose of the presentation then is to simply list what's important for an independent oil and gas investor from a host government in terms of policy, legislation and, more importantly still, behaviours, rather than what's important from Mother Nature in terms of environment, geology and prospectivity. Although Guinea is listed in London, many of you will have already realised that I am myself not actually English. I am a Scot, so I hope you're okay with the accent. This short presentation is deliberately pitched at a very high level, and I shall try to be terse. So whether you're okay with the accent or not, if there are any points you'd like to discuss and understand better, then I'll be very happy to engage with you afterwards and talk some more. On to the first slide then. So I'll be quick here. As I've mentioned, Guinea Energy is listed on the London Stock Exchange and we're headquartered there. We have an important back office in Istanbul, Turkey. We are part holders of a very productive licence in the Kurdistan region of Iraq. We have quite recently taken up a position in Oman on a very exciting exploration licence there, where we're about to appraise some discovered resource. Guinea also has an extremely exciting exploration licence with enormous potential in Somaliland, in the Horn of Africa. Another interesting geography. Yeah, we can pick them. And with an intriguing dynamic all of its own, and in an area that we sense is becoming increasingly of interest, if not important, to the United States. Sadly, I won't have time to go into that now. Instead, this pack will focus on Kurdistan region of Iraq and Oman. Guinea is what's commonly described as a mid-size independent. In recent months, our market cap has fluctuated between around $200 million and $280 million as our share price fluctuates, largely in response to oil price and to market sentiment on oil price and to some specific challenges for oil companies producing in Kurdistan that I'll come to later. The Guinea journey started in Kurdistan almost a quarter of a century ago, following the downfall of the Saddam regime, and we have a long and very colourful history in Kurdistan, having been there for both the good times and the not quite so good times. Since our Kurdistan production began in 2002, we've invested a total of around $4 billion, recovered that investment, and also generated a further $2 billion in free cash for our shareholders. Importantly, over the same period, we ourselves have generated around 10 times that number, more than $20 billion in revenue and taxes for our host government and the people of Kurdistan and Iraq. In that time, we've also invested around $60 million in more than 250 different social projects there, ranging from vocational support for small businesses in the field, infrastructure projects like bridges, schools and the like, and educational projects, mainly educational projects in fact. More than $45 million of the $60 million total has been spent on education projects of one sort or another. Most recently, university scholarships for some very bright but disadvantaged young Kurds. These projects, I'm sure you'll recognise, are an extremely important part of any visiting investor's commitment to their community, and we're very pleased by the extent to which we've been able to help develop the region. The nature of our business there is cyclical, and through periods of growth and retraction, we've held, invested in and relinquished a total of 9 licenses in Kurdistan. We have, over the last couple of years, set out to streamline our portfolio in Kurdistan to the point where we now sit with a 25% share of 1 licence. the Tawke licence, which is operated by our friends and partners DNO, a Norwegian upstream oil and gas company. That licence, the Tawke licence, is able to reliably and predictably produce more than 80,000 barrels a day in gross terms. As I've just mentioned, Genel is entitled to a quarter of the contractor's share. And with lifting costs of around $4 a barrel, the Tawke operation, from a purely production and operational perspective, is a world-class asset and will remain so for a number of years to come. We use this graphic a lot. I appreciate the people at the far end of the room might not be able to make much sense of it, but we use this graphic a lot. We think it's quite an elegant way of illustrating our strategy, which, as I've mentioned, is a simple growth strategy. We believe that maintaining financial discipline, being careful with our money, and devoting attention to risk and the management of risk is just what we do, naturally. What we're driving towards is maintaining that strong balance sheet, avoiding too much debt, and keeping something aside for a rainy day. Finding new investments and income streams, and consequently generating cash for reward and for reinvestment to perpetuate the business. These are the cornerstones of our strategy. This is all aimed at shareholder reward, of course, whether that's in the form of dividend or an increase in equity value. To do all of that, we must grow. There's nothing novel in any of that. It's a simple strategy, a common one, and thankfully one that's entirely consistent with my Scottish Presbyterian instincts. So, as we now emerge from this period of designed contraction, we are, and have been for some time, seeking growth opportunities that will allow us to expand our footprint and geographically diversify our production, spend our money in a way that doesn't carelessly expose the business to risk. Risk is inevitable, of course, but we try to tread reasonably carefully, and provide returns for our owners. Quote, "Owners are rewarded through profit, which arises from the productive use of capital. Self-interest? Yes. But when channeled through the free market, leads to outcomes that benefit society as a whole." End quote. Wise words written by Adam Smith, the Scottish professor who invented capitalism in 1776, the very same year that the United States declared independence. You were fighting the English in the 1770s, but we had grown bored with it by then and decided to invent capitalism instead. One such opportunity has been our recent entry into Oman, where we signed an exploration and production sharing agreement in early March, with royal assent granted last month in May. Royal assent is the final approval that allows work to begin in earnest, and we anticipate that physical work in the field will begin later this year. Although the licence we've signed is an exploration licence, oil has been discovered on the block already, and we'll start there by re-entering existing wells to access the oil that lies at the bottom of those wells and bring it to surface. We'd had our eye on Oman for some time, and we're very excited to have established a foothold there, again, for reasons that I'll come to. Typically, for small oil companies in our situation, we have a compact but highly experienced and competent team. Less typically for smaller companies is our breadth of expertise. We not only enjoy a high degree of competence across the technical and operational disciplines, but we have significant international management experience in the legal, financial and commercial disciplines too, which gives us a broad range of skills that allows us to run an efficient business and the ability to assess growth opportunities quickly and properly. And finally, notwithstanding my earlier comment about being a proud oil and gas guy, I can tell you that Genel genuinely recognises the very serious environmental issues the world faces and recognises the need for a proper, well-managed energy transition. I was told by a friend last night that that might not be a very popular view to hold on this side of the Atlantic. By a well-managed transition, I mean one that's determined, certainly, but one that also recognises the importance of affordable and secure energy for everyone. A transition that allows, or tolerates perhaps, the responsible use of fossil fuels as the technology evolves to displace it. Genel has a genuine commitment to being a responsible part of what we hope will eventually be that properly managed energy transition, and while we can't yet devote the resources to research and the development of alternative sources of energy that larger companies can, we do what we can in all of our operations to behave responsibly and make the best use of technologies available to us to minimise our effect on the environment. We take those responsibilities very seriously. So much for Genel. The Important characteristics of any good investment environment are rather obvious, I suppose. And if I were to ask an audience as sophisticated as this one, what a small company might need from its host country, from the place where it chooses to do business, I'm pretty sure you'd come up with an accurate list. Where I think this slide may be helpful for you is if I draw some sort of a distinction between our real needs, our must-haves, and our wants. Needs and wants will obviously vary from company to company, depending on the state of their business and their appetite for risk when they make that country entry decision or a big investment decision. I don't speak for the industry, but I will go through the current Gunnell version of that list and try to explain where we sit today. Gunnell's needs, which again I would suggest are reasonably typical, are political stability. We will consider working in democracies, absolute monarchies, and one-party states. Stability is important in terms of predictability, rather than in terms of a preferred political system. There are, of course, countries that do not pass through our screening process because we determine that despite stability, their political system and their values render them places we simply don't want to do business. But a degree of political stability is essential when you're making business investment decisions that may take years to yield a return. We need a relatively honest and predictable environment to invest in, a respect for the rule of law, the sanctity of contracts, and a commitment to accepted international business practice, including paying your bills on time. Not everyone does, is essential for Gunnell. Good structure, legislation and regulation that's consistent with the first 2 points, oil and gas laws and legislation, recognisable licensing arrangements, and a committed regulator that also recognises their importance. We need a financially stable and profitable environment to invest. Fiscal terms enshrined within those proper contracts that support a calculable and reasonably predictable return, and that shall be respected by all parties. And finally, we need a peaceful environment. By that, I don't mean Shangri-La. There are many places one can do business that are not ideal in this regard, and I'll talk about security in a second, but clearly if a country is at war or if there is very serious civil strife, then that's an area that Gunnell won't contemplate going to or staying in for as long as that persists. Not much to ask, is it? It's worth considering at this point, perhaps, that there are somewhere between 193 and 197 countries in the world, depending on who you talk to. And of those, perhaps about half of them, 98, according to the EIA, produce hydrocarbons in some shape or form. When you filter those countries for the characteristics I've mentioned here, then that number drops further, and quite significantly. Then we move on to Gunnell wants on the right-hand side, and by that I mean important factors that might be tolerable, even if not entirely satisfied. And those are, well, we want a safe environment, or rather one that is safe enough. As I've just said, war, very serious civil unrest, or the potential for very serious armed conflict are red lines for Gunnell. We must have what I've just termed a peaceful environment, but that, of course, is a relative term. Gunnell and other oil companies can, and do, operate quite effectively in areas where some sort of security challenge may be close by, and where the immediate surroundings may not be inherently safe on a personal level for the people that we employ. Oil companies manage all sorts of risk routinely, and good oil companies devote a great deal of time and effort to identifying and managing risk properly. In terms of security, Gunnell and its peers have access to quite sophisticated and very effective security apparatus. Countries where potential security issues are common, or where there are pockets of unrest, might be tolerable, provided we can maintain an environment where our people, our assets, and ultimately our business are kept safe, and where, if a situation deteriorates, we can get them out of harm's way quickly. Gunnell faces security challenges in both Somaliland and in the KRI, for example. In such places, we study our environment carefully, work closely with the excellent authorities, we have access to excellent security systems, and the wherewithal to keep our people safe, even if they are places that you wouldn't necessarily want to take your family on holiday. Next, we would like access to further opportunities. We want to be able to replace the barrels that we produce and sell. All oil fields decline, and like all other oil companies, Gunnell is on a continuous search for more barrels. Having established a presence in a new country, scaling up operations within that particular locale is an effective and efficient way to grow, if you can. So when Gunnell is looking at where it wants to establish a business, the potential to expand that business portfolio organically is an important consideration. The opportunity set, the deal flow, the extent to which the host country encourages and enables expansion are very important wants for Genel. We want a competent environment. We like to talk to people that know what they're talking about when we discuss and agree investment decisions and budgets. Of course, it's the first job of any host government and any host regulator to pursue the best interests of the host country, its national resource and the best interests of the people of that country. Clearly, that has to be their priority. We don't expect a compliant host, but smart, experienced and committed people who know the industry, who properly understand the challenges and know where you're coming from, who can raise the right challenge in a straightforward way, but who ultimately appreciate your position too, are a godsend for any visiting investor. And we look for that when we consider where to go. We would like to access a competent and competitive service sector. Well-established and buoyant oil-producing regions generally have and share a well-established and buoyant service sector. By that, I mean the various companies that provide the range of goods and services that oil companies need when they explore for or develop oil reserves. These are the people who actually drill the wells, provide you with equipment and tools, provide the infrastructure you need, whether that's a road, a pipeline, an office, a production plant, or the beds, food and medical facilities you need to accommodate your workforce. By contrast, less well-established oil-producing geographies may have little or no competent services available. Mobilising dedicated services or having to suffer expensive or inefficient services is not only a commercial burden, but can prevent you from realising the plans you have established and the commitments you have made. It can even make things unsafe. So having access to good and competitive services is a good thing and a situation that we try to satisfy. Finally, we want to work in an investment climate that, in addition to all the qualities I've listed, encourages foreign direct investment and has a good reputation for doing so. This increases our ability to access external capital, borrow money, in other words, at better rates than we can then deploy. It's simply easier to borrow money if you've established in areas recognised as good and stable investment environments. Now, before I go any further, I have to confess that these conditions as a set are an ideal. Genel does not adhere to this suite of needs and wants in a dogmatic or an insistent manner. We are, after all, a practical and pragmatic bunch. And we recognise that if some of these requirements have to be compromised, then that might be something that we can do, although the associated risk introduced has to be carefully considered and managed. As Groucho Marx famously said, these are my principles, and if you don't like them, well, I have others. I'm doing something wrong here. Let's talk about Oman then. What I'd like to do here is work through the characteristics Genel relies on and apply those to Oman. As many of you will know, Oman is a sultanate, an absolute monarchy where the sultan is at one time the head of state, the head of the government and the head of the armed forces. It's been that way for a very long time. Today's system, or something similar, has been in place since the mid-17th century. Civil society is stable. It seems happy. The Omanis enjoy comparative wealth. GDP per capita is around $20,000, which is about the same as Greece or Poland. Oman has a well-defined governmental organisation, and while many senior positions are directly appointed by the Sultan, there is continuity, good structure, and clearly defined roles and responsibilities. In recent times, Oman has begun to assume a much more prominent role on the world stage, most recently as interlocutor and trusted host for the recently suspended and now apparently unnecessary talks between the US and Iran on the suspension of nuclear weapons manufacture. I'm told that's the sort of role that the Omanis have been quietly cultivating for some time. They are trustworthy and trusted people. The legal system is a mixture of Islamic law and civil law. Oman is predominantly Muslim, of course. The commercial legal system is based on international laws and principles. Oman has recently set up its own arbitration forum, but dispute resolution is still based on international arbitration. Okay, I've jinxed this microphone. The licensing arrangements on offer are easily recognisable as production sharing contracts, where an oil company, as the investor, invests in accordance with an agreed work programme, and then the proceeds, after taxes and royalties, are shared in a manner that allows the investor to recoup their investment before also sharing in the resulting profit. These arrangements are honoured promptly and diligently. Very important. The oil and gas industry is regulated by the Ministry of Energy and Minerals. It's a large and well-staffed ministry, accessible and full of highly experienced and surprisingly well-qualified personnel. Actually, I shouldn't make it sound that we're surprised. Government officials are well-qualified. That's not unusual at all. What I meant was technically qualified. What I meant was there are many important outward-facing people in the ministry that have proper formal technical or commercial oil and gas training, which isn't always the case. And of course, this is particularly beneficial when they are actively engaging with investors, as they do, to consider the potential renegotiation of contractual terms designed specifically to encourage further investment. Oman is keen to encourage further investment and has worked hard to create an attractive investment climate, and I think that's most easily illustrated when one looks at the degree of competition for Omani assets. Opportunities in Oman tend to be fiercely contested. There are exploration opportunities being marketed as we speak, and I'm sure a great many investors will be looking at those. So in terms of our needs, I'm sure you'll all agree that Oman scores well. And if we spend just a few minutes talking about the wants, then it's clear Oman is a safe place, crime is very low, there's no civil unrest. Competition for Omani opportunities is fierce, as I've said, but we think that Oman offers great potential for further in-country growth, and we hope to expand our footprint as we bed in. I should also mention the service sector here too. The oil and gas sector is well established in Oman with commercial production since the late 60s. And at the most recent count, there were something like 20 oil and gas companies active in the country. So the supporting service sector is well established. Finally, we really enjoy working with our new friends and partners in Oman. Our partners are OQ, which is essentially a state oil company, a government subsidiary in actual fact. Just like our regulator, we're seeing a very high standard of competence and business acumen. The folks we work with are extremely well qualified, and that's often accompanied by a successful international career in oil and gas before assuming their domestic duties. So although they have their own view and are very firm on their needs and wants, at least we're all kind of talking the same language. Importantly, they share our company values too, and that cultural fit is something that both companies have mentioned when talking publicly about this new arrangement. Oman, therefore, scores high in the Ganel selection tally, and the decision to move into Oman was an easy one to make. Now that we're there, these qualities all make work planning and budgeting easier, it makes work execution easier, it makes problem solving easier, and it makes making decisions easier. So if we move on to Kurdistan and Iraq, just as we've done for Oman, work through Ganel's key characteristics, the picture here is a little different. I think it's fair to say that oil and gas production is no less important to the Kurdistan region of Iraq than it is to Oman. Various reports suggest oil and gas revenue accounts for somewhere between 30 and 50% of GDP in Oman. Accurate data is hard to find for the KRI, but there are reports that suggest oil and gas accounts for more than 65% of KRI's GDP. Again, we can't be sure, but these reports suggest a GDP per capita of around $7,000. It's certain that the oil and gas industry is by far the largest revenue contributor, so it's an extremely important part of KRI's economy. In terms of political stability, our Kurdish friends will certainly claim that the situation is stable, and Kurdistan is often rightly held up as an oasis of calm and order in a region where such a situation is rare. But there are several complementary dynamics that make it difficult to claim predictability or reliability. Within KRI, we have a representative democracy, much more akin to what we have in the UK or the USA. The dynamic is dominated by two major parties, the KDP and the PUK. Each prevail in their respective territories, segregated mainly along tribal and geographical lines. Following the most recent election in October 2024, which itself had been delayed by 2 years, KDP remains the largest party despite its number of seats reducing. But it doesn't have an overall majority and aims to form a coalition with its main rival, the PUK. 8 months after the election, we're still waiting for negotiations to conclude and a new government to be announced. From the outside, the relationship between the KDP and the PUK seems a little tense and unpredictable. The KRG's relationship with the federal government in Baghdad is a difficult one. As best we can understand it, and we don't understand it well, many of you will understand it better, The very factional nature of Iraqi politics and successive Iraqi governments means that the Kurds are admired and supported by some in Baghdad, tolerated by others, and disliked by the remainder, all while holding a significant voting bloc themselves within the federal parliament. If one layers this onto the ever-shifting picture of different factions within the federal government as they jockey for authority and influence, a complex picture becomes more complex still. Another complication is the presence in Iraq of militias and other organisations sponsored and directed by forces out with Iraq. It would be easy for oil companies and other investors in KRI to dismiss this as a distant threat, a risk that we manage, and we generally do. The fact remains, however, that on occasion oil and gas infrastructure has been targeted to threaten Kurdistan, and in one instance at least with fatal consequences. Those same groups mount attacks on American facilities within KRI fairly regularly, and I guess we're likely to see more given what's been happening in the last few days. The contractual system in KRI, like Oman, is a PSC arrangement, a well-established and widely used contractual mechanism, but different from the one that has historically been used in federal Iraq. Successive challenges by federal Iraq to the constitutionality of such arrangements may have unnerved some in the investment community, perhaps. Today, the judicial authorities in Iraq seem to consider the Kurdistan PSCs as constitutional and sound, a recent change from their previous position. Whether that view persists or not, we simply can't be sure. There are also complications around prevailing laws. Kurdistan has a regional oil and gas law to which its PSCs refer. Today, there is no federal oil and gas law, and efforts to establish one have been, from our perspective at least, sporadic. How that new law might change Iraq's view of KRI's oil and gas arrangements has yet to be seen. It's simply another uncertainty to consider. A dispute between Iraq and Turkey over the legality of exporting KRI oil through the pipeline that runs from Kurdistan through Turkey to the Turkish port of Ceyhan went to international arbitration, and in early 2023, that International Arbitration Tribunal ruled that the loading of KRI oil at Ceyhan without federal Iraq's permission ought not to happen. The pipeline closed immediately following that decision in March 2023, and oil and gas investors in Kurdistan, denied access to the international market, have been selling their oil locally at much reduced prices ever since. An arrangement recently made very much worse when hostilities against neighbouring Iran broke out. That pipeline issue, essentially a political issue, has been subsumed into an even larger and longer-standing political spat between the governments. The latest agreement, and there have been more than one, I think, between the federal and regional governments to have KRI's rightful share of the sovereign budget transferred to the region in return for Kurdistan providing a large part of its domestic revenues, including oil revenue, to Baghdad, hardly even got off the ground before collapsing with claims from both sides that the other didn't hold up their end of the bargain and acted in bad faith. The issue of budget management and withholding sovereign budget from Kurdistan is a long and painful one that has had a direct bearing on oil and gas investors in Kurdistan for years. With oil producers being denied payment for their production by the KRG because, as the KRG claims, having been denied budget transfer from Baghdad, it has had to use the oil company's share of oil income for other, more important purposes. We can each decide for ourselves whether that's a reasonable position for the regional government to take. It's certainly not straightforward, but you can imagine how prospective investors might feel when they hear of oil being produced and delivered, being sold, but the proceeds of that sale not being shared with the companies contracted to find and produce oil, and then hand that oil over for sale. That's a difficult situation to explain to potential investors. All of this creates an incredibly challenging environment for the regional government and for the Ministry of Natural Resources in Erbil. And you can see that in terms of political predictability and reliability, good regulation, adherence to contractual agreements and fiscal terms, KRI isn't in a great place at the moment. That being the case, there seems little point in applying Genel's wants to KRI. Please don't think for a minute that Genel is unsympathetic to the plight of the Kurds. We've been there for a very long time. We know them well, we like them, and many of us have good relationships with Kurdish friends and colleagues. Before downsizing, Genel had an absolutely fabulous team of Kurds who were smart and who worked hard and who helped us run our business in KRI. It's our sincere hope that the federal government in Baghdad and the regional government in Erbil will be able to negotiate a way out of the current situation and create an environment where the investment proposition improves and the industry grows back towards its potential. There are green shoots emerging, with a couple of prospective new deals in the region being announced very recently, but it is Gwenaelle's view, and only Gwenaelle's view, that much more needs to happen, and we genuinely hope for better days ahead. Okay, we're getting close to the end of the slideshow. I'm sure you're all very relieved. But I thought we might finish with me quickly reminding you of a couple of reasons why smaller oil companies like Gwenaelle are so important in the oil patch, and particularly important for emerging economies. This slide's self-explanatory. It doesn't need much commentary, but in a nutshell, we bring a different approach to larger companies because we're obliged to find better, faster and cheaper ways to get things done. Ingenuity is one of the Gwenaelle values as it happens. The others are integrity, accountability, respect and collaboration, in case you're interested. We run a tight ship, or at least try to, and by keeping costs as low as possible, we can keep operations viable for longer. That allows us to work on smaller and older fields that larger companies might consider insignificant. It's a point that always lands well with host governments and regulators when we explain that this is a way of extracting more of the national resource for the national benefit. We don't carry a large corporate overhead, and certainly within Gwenaelle, we are determined to find and develop talented locals, not just as a labour force, everybody does that, but to find people that we can really develop and give more and better skills to. All very straightforward. Gwenaelle and its similarly sized peers are important components of the oil industry. Our focus on financial discipline endears us to investors who, like us, recognise the importance of avoiding both surprise and waste. We aim to grow, we have to grow, but we have to be careful where we invest. There are all sorts of risk in all aspects of oil and gas, but for Gwenaelle, starting in an unreliable and unpredictable environment is, I'm afraid, something we simply can't contemplate. That concludes my presentation, ladies and gentlemen. As your president is fond of saying, thank you for your attention on this matter.
Thank you, Paul. I took some notes and I wanted to ask you, you talked about fiscal stability and you are owed arrears by the KRI because they're not getting their share of the budget from the federal government. And I understand that they've increased the price per barrel that they're offering the companies to what, $16 a barrel. So I'm just wondering what is actually holding up the restart of exports through Turkey? Is it because Iraq is overproducing its OPEC plus quota, and that in a way they don't particularly want to see exports from the north because that would make it really difficult for them because they would have to cut from the south? I may be wrong, but it would be interesting to have your opinion. And then you talked about sort of new deals, and recently I think Prime Minister Barzani was in Washington, and the two gas fields that Gwenaelle used to have, Miran and Binabawi, that gas was supposed to be developed and exported, I think, to Turkey, which never happened. And I would think that the gas story is pretty interesting, particularly for Europe after the Ukraine war. So I just want to know, how do you, I know that you're selling to the local markets at the moment at below international rates. Is that sustainable? Is that something that can you continue to operate in the KRI under these sort of conditions? There's a lot of uncertainty. You are owed arrears. You are selling below market value. The price of oil at the moment, which I don't understand, is sort of fallen below 70 despite the uncertainty and the tension. So I just wanted your opinion. And also, given what is happening now with the war with Iran, but is it really a war? But yeah, the conflict between Iran and Israel, is it over? Isn't it not over? I think talking to people who watch this carefully outside, it's like it may be just the first phase. It's a ceasefire. It's not a peace. So how is that impacting your operations? Does it feel vulnerable? Because we've seen so many changes in Syria, where you have a Kurdish contingent, where you have Turkey and the PKK supposedly at peace now, where you have, it's kind of complicated. So is that having an impact, or do you sense that there is more tension now because of what's going on?
I think there's about 25 points in that question.
Sorry, yeah.
I don't know how long we've got.
I got carried away.
Let me try and deal with most of them, if not all of them. I'm not sure I'm going to answer them in the same order that you asked them, but based on my notes, let me try and deal with a couple of things. Let me deal with the $16 a barrel thing first and make a clear distinction between what is local sales and where the $16 a barrel fits in. Today, Genel and its peers are selling their oil to local oil refiners licensed by the government, pucca proper oil refiners. We are selling product to oil refiners in Kurdistan, and I don't know the price that other oil companies are getting because that's obviously confidential. But we are selling our oil, which is good quality oil, at much less than half the value of the same barrel of oil in the international markets. And as tension started to rise, as we started to see instability in neighbouring Syria, and then as we started to see the threat of Israel approaching Iran, that price dropped further still, and is today lower than it's ever been before. And in actual fact, when hostilities did actually break out between Israel and Iran, the price remained the same because the people who were contracted to buy the oil elected to keep the price at the same, but the volumes that are now being taken from us have dropped significantly. So if our peers in Kurdistan are suffering the same problems that Genel's suffering today, we're selling oil at less than half the market rate, and we're selling much less oil than we ever have done before. In terms of sustainability, when the pipeline closed, like everybody else in Kurdistan, Genel undertook, we simply had to change the size and shape of our business to cope with the halving of our income. And we actually shed 70% of our workforce. So we cut our cloth to suit. It was a difficult thing to do. It wasn't a pleasant thing to do. It's kind of part of oil and gas life, but it certainly wasn't something that we wanted to do. And Genel's in a position today pretty much where the books are balanced. But if the reduced volumes going forward are sustained, then we're going to have to look at that again. And that's going to be very, very difficult to remain buoyant as an oil company in those circumstances. So that's the first thing I'd say about local sales. The $16 a barrel that you hear talked about is actually part of a proposal that's being negotiated between the federal government and the regional government, whereby the KRG takes all of the oil that's produced in Kurdistan and sends it for sale at Ceyhan. And in return for all of that oil, the federal government is proposing that the regional government be given an upfront payment of $16 a barrel, which would then be distributed amongst the oil producers in Kurdistan. And then, subject to some sort of an endorsement of the oil companies' entitlement within their various contracts, there would be a further adjustment beyond that $16 a barrel to be sure that the oil companies got everything that they were owed. It is the scope and extent of that endorsement process, of that auditing process, of that double-checking process, which has been the sticking point in most recent negotiations. And that was the key point that was being negotiated before the most recent negotiations stopped. So the $16 a barrel has got nothing to do with domestic sales. It's part of a proposal that would allow the resumption of international oil sales. The new deals are interesting, of course. I can't talk to the detail because I don't know the detail. Clearly, one of the new deals that's been offered is a gas field that Genel lost following a legal action between ourselves and our host government. It's a large gas field. Its potential is large, but the amount of money that's going to have to be invested and the period of time over which that money has to be invested is quite significant. So whoever's putting money into that project would have to satisfy themselves that the returns are there at the end of the day. And that's something for the new contractor and the host government to negotiate and understand. I can't really comment on that any further. I don't know anything at all about the second deal. We are no stranger to conflict and uncertainty in Kurdistan and in wider Iran. and we've not grown in yours, but we're not particularly sensitive to the vagaries of doing business in that region. The current problem between Israel and Iran moves that entire dynamic into a very new area, into a new level of seriousness. Like everybody else, we're kind of standing back, trying to make sense of it all and trying to understand what it means for Iraq. It's early days. There is a ceasefire 1 minute, it stops the next. We don't really know how this is going to play out. We have access to a great many educated and careful thinkers on this subject, and some of them are here with us today. So we're trying to make sense of it all, but what it means for Guinea going forward, I'm not sure. As a general rule, though, it's clear, and I think it was clear from the presentation, that while oil companies can tolerate a degree of instability and a certain lack of security, it's very, very difficult to do business in a war zone.
Thank you, Paul. I'm actually going to give the thinkers a chance to ask questions if they want them now. So please, if anybody has any questions. Brad, you're the first.
Yeah, I wanted to go back to the deal with Baghdad in terms of the ITP flows, or the flows through the Kurdistan pipeline, and the issue of audit. And the issue of audit and where the sticking point is. Because it seemed at one point that Baghdad and the KRG had agreed the general terms back in February. They'd gotten to a point where the $16 was there, the audit. And then it seemed that the KRG said, yes, but the IOCs operating in Kurdistan actually aren't happy with that. So they now have to be addressed, and their concerns have to be addressed. And we've seen what's come out of APICUR as sort of at least the headlines. So is this a sort of three-way conversation? Is this the KRG or Baghdad sort of hiding behind the IOCs as an excuse? And when it comes to sort of one of the statements that I think concerns Baghdad, which is that the IOCs want guaranteed payment in the future, and what that means, is that a way of shifting the payment risk and shifting some of the risk in terms of remuneration onto Baghdad, irrespective of the politics? Or there seems to be a lot of different voices. So what's the reality from Guinel's perspective?
The crux of this issue, Rad, is really stems from the IOC's determination to have their contracts honoured. Giving the IOCs $16 a barrel and nothing more is not consistent with the terms of the contract. The negotiation has not been a three-way, at least not until very recently. The IOCs have deliberately and been consciously kept at arm's length from these negotiations, and for most of the time the conversation has been between the KRG and the federal government representatives. More recently, there has been an IOC presence in the negotiations, but that's quite a recent development. So the IOC stance is really very simple. We have contracts, and that contract is between the Kurdistan Regional Government and the IOCs. The federal government's not part of that contract, but the Federal Supreme Court has now determined that those contracts are valid and constitutional and ought to be honoured. Giving $16 a barrel up front does not give the KRG the opportunity to give the IOCs what they're due under the contract. So there needs to be something more. And the IOCs are of the view that that something more needs to be negotiated and understood before any part of the deal is executed. So in essence, it's a two-stage process. And the first stage of the process seems more or less to have been agreed. And the $16 a barrel has been ratified by the federal parliament. But it's what happens next that's important. And the budget law wording that's been submitted to the federal parliament says that there is going to be an independent third-party consultant, an oil and gas expert, who will come in and study the IOC's operations and determine what that tally-up ought to be. Now, that's perfectly okay if the job of the independent consultant is to come and make sure that the IOCs are invoicing in accordance with their contract. But it's certainly not okay if that independent consultant comes in, takes an independent view as to what the IOCs are owed, and suggests to the federal government that another figure is due instead. And that's the threat for the IOCs, and that's what they're keen to avoid. Now, we think our position is a reasonable one, and we think given the opportunity to sit down and talk to the federal government about it, we're absolutely convinced that we can help them see the merits of that case, particularly since the Federal Supreme Court has now deemed that the contract's valid. It's really just a case of getting the people round the table and in the right mood to discuss things properly.
Any other questions? Yeah, please go ahead. Your mic.
Or you can shout.
Hi, Paul. I'm a Kurd US God. I see some natural connection here. So I have some question for you. So what is your total investment in Kurdistan? And also whether there has been new investments since the ITP was closed in March of 2023? And also, do you think really the closure of the ITP is more about the $16 or whatever dollar they are trying to put a number of the price of operation cost of production in the Kurdistan region, or more is about sovereignty between the KRG and the Iraqi government? Because the more I see it, it's not about money or financial incentives for Baghdad. It's more about sovereignty, and Baghdad is really not ready to give the Kurdistan region any sort of control over the energy, and that's why it has been quite difficult for both parties to reach an agreement. Do you share the same view? Thank you.
I do. I do share that view, and I'll come to that in a moment. I'll deal with your other points first. Our total investment in the 20-odd years that we've been there is more than $4 billion. I made mention of it in the slideshow. As far as the extent to which we've been investing since the pipeline closed, we are obliged under the terms of our contract to make every reasonable effort to produce as much oil as we reasonably can. So we have continued to invest. We have submitted budgets for approval to our host government, which basically allows us to spend a reasonable amount of money to keep production levels as they are today. We've had a very difficult job getting those budgets approved because of course, our host government wants us to invest more. But they want us to invest more at a time when we're being paid a fraction of the value of our product, right? Which doesn't kind of make sense. So it's been a long, slow and laborious process getting budget approval, but we need budget approval because we need to be able to recover those costs from the proceeds. So we're basically trying to strike the balance between keeping the lights on and keeping production levels fairly consistent with where they are today, and no more than that. Now that works for so long, but I made mention in the presentation that all oil fields decline. And if you're going to run an oil and gas operation properly, you should be continually reinvesting to try and increase the volume of oil that you have access to make sure that your rates remain as high as possible for as long as possible. And that's not happening. And it is only a matter of time for Genel and for the other operators in Kurdistan. For as long as that situation persists, we will start to see a decline. And as if that weren't bad enough, when you've got high levels of production, it's relatively easy to keep them high. Once you lose them, once they drift low, it's very, very difficult to get them back to where they were before, for all sorts of geological reasons that we don't have time to go into today. But a smart operator will keep the rate on plateau rather than allow it to drop and try and build back up. So there is a problem there. I don't want to use the term, it's not ticking time bomb, that sounds very dramatic, but there is a continual decline in production from the Kurdistan region of Iraq. And if this problem isn't solved and the IOCs aren't encouraged to invest properly in their fields, then ultimately that's going to be to the detriment of KRI and the IOCs as well, of course. As far as as far as the point you make around, is it really about ITP or is it really about sovereignty? I'm inclined to agree with you. I made the point during the presentation that different people in federal Iraq feel different ways about the Kurds. Some people like the Kurds and are supportive of them. Some people see them as a bit of a pain in the backside, but we can put up with them, and some people really don't like them. The issue of Kurdish sovereignty and the issue of KRI being a semi-autonomous state is a contentious one in Baghdad. And I'm no expert, but I'm pretty sure that there are people whose real motivation is to try and make sure that the Kurds' efforts to break away, even in a sort of semi-sense, don't come to pass. I think there's certainly a bigger political agenda behind the ITP, and the ITP is just one of a number of ways in which they can put pressure on the Kurds.
I think it's time for the second session, so we're exactly on time. But as you mentioned, you know, Tak-Tak, I think, was one example of how a very promising field once declined, and that used to be one of yours. So unless there's more investment, I don't think, you know, and the Kurdistan region was so promising when it started. And it's a bit sad to see that it's not.
Well, it is still promising from a geological point of view, I can promise you, if the conditions are right.
From an investment, I mean, from an investment point of view.
You know, from a purely technical point of view, it's still got bags of potential. And that's the real tragedy, of course, because with just a little bit of time, more time and effort on everybody's part, it could be a very different story.
We didn't get a chance to talk about Oman, but Oman is the sort of the easy one. So I'm going to pass it on to Ambassador Rubik now for the second session. And thank you so much, Paul. It was very entertaining and very, very informative. So
Pleasure.
We thank you, and we hope.
So we'll do a quick rotation. If I can have Mona and Alan and Kristen and Bill sit up here at the front, and the three of us will move around to the sides and launch into our to be interesting and probably inconclusive next session about the geopolitics.
Do we take our name tags?
Do take the name tags. Yeah. Because you don't want to get credit.
Yeah. Is she? Okay, great.
We're lazy.
Thank you, Alan.
This is my water.
Yeah.
So your water?
So I'll put your yeah. Shukran. Okay. Okay, Kristen. Sit next to Aaron. Okay, have a seat.
Somebody will get it for you. Don't worry.
And Mona. That's okay.
So,
Good.
where would you like me?
That's for you right here.
Here.
Give me.
Okay, sorry, my card is coming.
Thank you.
Okay.
Oh,
Oh, I'm sorry. Pardon.
Good morning, everyone. So we'll jump right into the second panel. I'm Bill Roebuck. I'm the Executive Vice President at AGSI, and we're delighted to have you here today and to launch this second panel. We're focusing on the geopolitics out in the region. Let me just quickly, I think you have the access to the bios for everyone, but just a quick handle on each person I'm delighted to be on the panel with today. Mona Yakubian is a Senior Advisor and the Director of the Middle East Program at CSIS. Welcome, Mona. Alan Ayer is the Distinguished Diplomatic Fellow at MEI, and he's the founder and president of Air Analytics, and he's a long-serving previous State Department official. And Kristen Dewan is a Senior Resident Scholar at AGSI. So obviously the geopolitical subject of the day is Iran in the region. We're going to drill down a little bit on that crisis and talk about it. We're also going to spend some time later in the discussion talking about some of the other geopolitical issues that are on the agenda, so to speak, out in the region that officials, people, ordinary people focus on. That includes the war in Gaza, which is a big issue, the challenge posed by the Houthis to maritime security and also as a political problem. And then off in the distance, there's the situation in Syria and how the Gulf has engaged with Syria in the past, and will that continue? So our focus with this panel is going to be geopolitical developments. We'll tee up some specific inquiries that I think some of our experts can handle later today on some of the energy and oil price issues. Thus far, looking at it as a non-expert, it seems like the impact on oil prices has been a bit muted in given the size of this crisis in the past couple of weeks, but we'll see how that goes. So the matter at hand is the Iran crisis. We'll start with that with our members of the panel. I would just say, it's amazing what one day a difference it makes in seeing how things develop. We've seen reports now, of course, of a ceasefire offered by President Trump and agreed to by Iran and Israel, and then subsequent reports of the ceasefire being violated and missile attacks or air attacks targeting each country, and with reports of casualties, at least on the Israeli side, of 4 killed down in southern Israel in the Beersheba area. So there's a lot of questions about the status of the ceasefire and how it's going to move forward, the impact of it, and we'll talk about that some as we dig into this issue. Also, it's going to be useful to discuss the issue of diplomacy and what kind of role that's going to have and how they're going to shape the diplomatic effort going forward. Who are going to be the players that will shape it? Will there be bystanders who are immensely interested in it but not really playing a part? All of those issues are going to help shape the diplomacy. There's the question of will Iran be forced into some sort of coercive diplomacy that will require intrusive inspections by the IAEA? That's a big issue that's going to be dealt with. What is the status of Iran's supreme leader, Khamenei? Is a succession plan already in place? Is it already being implemented? That folds into the bigger issue of what has been discussed a lot in recent days of regime change, and we'll consider that. What kind of regime change was being talked about? Is there some sort of slow-moving regime change that has already begun to occur in Iran? Or has it, in fact, despite all this crisis, despite all the pressure that the regime has been under, hasn't the regime shown quite a bit of cohesiveness and ability to survive under intense pressure? So we'll look at all that. Delighted to be with you, members of the panel. Alan, maybe I'll start with you as our someone who has focused on the Iran issue for so many years and has also devoted a big part of your life to learning about Iran, speaking the language. Let me ask you first if you can just, in all this dizzying development in the past 2 weeks and the events that took place before, catch us up a little bit. What do you see since these June 13 attacks that are the key developments, and of things I mentioned or other issues, what do you see as the key issues that are going to need to be looked at going forward?
First of all, thanks for having me. It's a real pleasure seeing so many longtime friends around the table who I've not seen in a while. Increasingly uncertain times in the Middle East and with Iran, that certainly will not detract from the confidence with which I give you my opinions, but don't be fooled. I mean, June, the Israeli, I mean, for me, the decisive break point was October 7th, and everything since then has been a consequence of that. And the changes have sort of increased in rapidity almost exponentially as we move closer and closer to the present time. In terms of the key changes for Iran, and just like you can't stick your foot in the same river twice, talking about Iran today is different than a week ago and a month ago. Regime change to a large extent has already happened and is happening, unfortunately. So, yeah, Iran has three pillars of its defensive strategy. The possibility of nuclear breakout, its system of proxies, and its missiles. Those are all gone. So the defensive strategy and the people who designed and implemented it are deader than vaudeville. They're gone. So in terms of day after thinking, Iran is going to have to do a lot of, once it emerges from the tactical mess it's in, a lot of strategic thinking to figure out where they go from here. They say generals always fight the last war. So the generals in Iran right now, even now as the ceasefire, inshallah, holds, will begin to start planning to prevent the war that in effect they've already lost. In terms of regime change, in the conventional sense, I don't see it happening. There were no signs during this, whatever you want to call it, war, conflict, dust up, misunderstanding, that no signs that Iran's ability for internal control weakened. There was a significant rally around the flag effect. There is no, even though I think I tweeted this at some point, even though there's many brave and dedicated, principled Iranians, both inside Iran and outside the country, dedicated to bringing about a better government for the Iranian people, there's no Iranian opposition. So it's a misnomer to talk of a regime change. You can talk about, as Israel did, regime degradation or incapacitation or instability, which was admittedly one of the three war goals of Israel. Israel, when it started this, said, we want to get rid of Iran's nuclear infrastructure to eliminate the nuclear threat. Parenthetically, that has not happened. We want to get rid of Iran's missile production capability. That largely has happened. And we want to get rid of Iran's ability to promote its axis of terrorism. We could talk about that later. Then they also said we want to rid ourselves of this troublesome Iranian regime. So instead of, it's both trying to they're not trying, as the U.S. is trying to do, to modify Iranian intentions, as we were trying to do at the diplomatic table. They're just trying to eliminate Iranian capabilities. So in terms of diplomacy now, this is my final point, if in fact the U.S. and Iran return to the table, Israel will be a virtual presence there because I think they feel they've bought themselves the right to have a say in whatever final deal comes out. But I don't think Iranian red lines have changed. And it will be interesting to see what the U.S. tries to do in new solutions. So that's my initial take, and I'll bounce it back.
Thank you, Alan. Mona, maybe I can follow up with you and see if you could tease out just a little bit where you think the diplomatic effort is going to go. How do you see diplomacy taking over from what has been up to now? I mean, there was initial diplomacy, but then it folded into a military conflict. If the ceasefire holds, we could be headed back into diplomacy. How do you see that diplomacy being shaped? Who will be the players, and what will be the outcomes?
Thanks, Bill, and thanks to the Arab Gulf States Institute. It's an honor to be on this panel and to be with all of you this morning. So, I mean, I think the prospects for diplomacy this morning are certainly far better than they were 24 hours ago. But I don't know what we can say about what they'll be 24 hours from now. So, I mean, this has been a series of 180s, honestly, that have been so dizzying. I was just talking to someone earlier this morning. I don't think anyone really knows where we are in terms of what is the trajectory. But I do think there are a couple of points that are clear here. One is, well, we are in the midst of a ceasefire. It is quite shaky, and any of us who have worked on the Middle East understand the nature of ceasefires, that they are indeed rather difficult to predict and to stabilize and to frankly turn into more permanent peace. So that I think goes without saying. But that being said, I guess there are a couple of points that I would highlight that for me suggest that perhaps there is a possibility now that diplomacy really could take hold. I don't want to sound naive or overly idealistic, but let me at least raise a couple of those points, and then, of course, shoot those points down and make sure we all are aware of all the pitfalls as well that lie ahead. The first is, I think, if we look at Iran's retaliation against the U.S., it seems quite clear that it was choreographed to be telegraphed in order to make sure there was enough time for the U.S. To evacuate the base, to prepare, and indeed, President Trump even thanked Iran for letting us know in advance. So much for theater. But anyway, I mean, he sort of pulled the curtain back, but okay, not really supposed to do that. But anyway, but I think it's really important to understand that, because I think it highlights that the Iranians are in such a weakened position that they were really not interested in undertaking a response that would have goaded the U.S. or impelled the U.S. to respond again even more strongly. And so they had to pick that middle road. They had to thread the needle between nothing or not enough to look like there was anything there and too much. And I think they did it. And of course, they have practice in doing this. They did this in 2020 after the killing of Qasem Soleimani. It was almost the exact playbook. And it ended the exact same way in the sense of no U.S. casualties and a climb down from hostilities for now. So there's that point. The second point is it does seem that for now, and I really always now say for now with President Trump, that he is interested in pursuing the path of diplomacy. I don't think the Trump administration is interested in getting involved in an open-ended conflict with Iran. I think they've made quite clear, and I think his hope when these strikes were announced, and there's lots of understandable skepticism that this would be one and done. We've gone in with all of our literally big guns, our biggest guns, and have cowed the Iranians and have, quote unquote, obliterated their nuclear capability. That I would question. And I say this because what's interesting is that Trump this morning was quite angry at both Iran and Israel for violating the ceasefire, and then apparently got on the phone with Prime Minister Netanyahu and said, "Thou shalt not strike again, like turn your planes around." And I mean, he has the leverage and the political capital to do that and demand that, given what the U.S. has just done. And so the Israelis have complied. So I think those two factors in particular, I think, are important to note, that there could be some momentum. The third point I'll make in favor of diplomacy, and then quickly kick me if I'm going on too long, Bill. The third point would be, I do think that there's increasingly an understanding that this complex challenge of Iran's nuclear capabilities cannot be simply bombed out of existence. There are all kinds of technical questions about even the extent of damage to various elements of its infrastructure. There's this question of the missing, or where is it? Where's Waldo? Where's the 400 kilograms of highly enriched uranium? It seems pretty clear that they moved it out of Ferdo, given the imagery showing trucks and so forth, prior to this. So we see the limitations of kinetic action, and also, I think, those whose pay grades far higher than mine will suggest that really this kind of complex challenge demands at a certain point that diplomacy come in and to actually begin to address Iran's intentions and where it is going. And so I do think that suggests that we perhaps are at that point. There are so those are the arguments in favor. The arguments against are, basically that we are in a highly unstable situation, and it's not clear that certainly it's not clear to me that the Israelis are done with what they need to do. I think this idea that, no, actually Iran does still have some sort of nuclear capability left, when Prime Minister Netanyahu stated unequivocally that this cannot be the case. So there could be that driver of additional strikes. There are questions about Israel's ultimate ambitions. I love the term regime degradation as opposed to regime change. We've certainly seen lots of language that suggests that the Islamic Republic really for the Israelis is simply a non-starter in terms of its remaking of the Middle East. So I think there are drivers there. And of course, there's Iran also that is, I think, seeking to continue to demonstrate its ability to respond. It has been very much degraded, its missiles degraded, its proxies degraded, although not entirely, and I'm sure we'll get to that in a little bit. And so I do think, it would be naive to think that, okay, good, we're good and we're moving into diplomacy. I think that we remain in an incredibly precarious moment right now, and there are all kinds of X factors out there that could very easily tip this back into conflict, unfortunately.
Thank you, Mona. Kristen, if I could maybe offer you two avenues for opening some remarks on this issue. One is you recently wrote a piece about the Gulf states and not being very actively involved in the diplomacy. Just give you a chance if you want to follow up what Mona has said about the diplomacy and see where you think that could lead. And have you been surprised about Gulf participation or lack of participation in the overall crisis so far? And then if I could maybe ask you to just assess the reactions of Gulf governments so far to the crisis, including if there's anything overnight, but just if you could curate that a little bit. Have they all responded the same way? What have they been focused on in their responses? And has it evolved in what they're focused on and what they're worried about?
Thank you, Bill. Well, let me start first with your latter question so we know on the table kind of what the Gulf states have done. First off, they initially, when the Israelis attacked Iran, there was formal condemnation from all of the Gulf states, as well as the GCC collectively. It was actually quite strong condemnation, quite sharp, especially in the case of Oman, who issued the first statement. Of course, Oman was the one that was hosting the negotiations, so I think they felt quite upset that they had said, we're having a meeting in like 2 days. So Oman, the sharpest one, Qatar as well, quite sharp, and even Saudi Arabia, basically calling for an immediate halt to the attacks and calling on everyone to realize that. I think you could see the Abraham Accord states also very strong condemnation, I have to say, but a little bit more balance about kind of de-escalation, kind of putting the onus on both sides. Now, after the United States then attacked Fordo, it's interesting that they, again, all of them did formally condemn the United States intervention as well. They lean quite heavily onto international law language, talking about the sovereignty of Iran had been violated. And also, Qatar quite specifically spoke about the legality, actually, of and the right of Iran to have a nuclear program that's properly looked over by the IAEA. So I thought that was interesting. So what that kind of gives us a picture of it. And I should also mention that they kept up a lot of very active diplomacy during the whole thing, speaking to people, both Western powers, each other Middle Eastern powers, and directly with Iran. So the communication with Iran did not end, and that includes speaking with the foreign minister as well as with the president, the top people head to head. So I think the second question then is sort of like, well, is that surprising? And I would say, of course, it's not where the Gulf states were at one time before. We know that the Gulf states, famously under King Abdullah, were calling on the U.S. very actively all the time to be much more interventionist and to go in and cut the head off the snake. So I think what we see, though, is the Gulf states have held to their more recent position, which is, in the wake of the 2009 attack on their oil facilities in Saudi Arabia, we can see a pretty distinct shift in the Gulf states working towards greater détente with Iran. I think there was a calculation that they couldn't quite rely on the United States to the degree that they thought they could, and that Iran was a much greater threat, and that maybe diplomacy was a better way to go with Iran, to take themselves to not be the direct target in between, because that is basically what they are, and some people can question that. But of course, Iran, one of the threats for retaliation that they have, that they can kind of, in their escalation, is of course to directly attack their neighboring states and the oil facilities within these states, which then causes broader pain. So everybody understands this, the oil states understand this as well. It is interesting to note that they have avoided that, right? Even when the U.S. did this massive attack that they did not do it from the bases. I mean, they did it all the way from the United States. So I think it's interesting that they have held to that position. And I think there is something else that's shifting here too, and we can get into it more later, but that is the Israeli role in the region changing post-October 7th? And I think the Gulf states have to really calculate about this. I mean, we have seen Israel willing to take a much more offensive position, whether that be in Gaza or, even in the West Bank, in ways that can disrupt the overall stability of neighboring states as well, not just on the Palestinians, but also maybe engaging on Jordan and Egypt. And we've seen, of course, the interventions in Lebanon, which I'm sure the Gulf states were very sad to see Hezbollah degraded, eliminated. But at the same time, to see Israel kind of on taking a position there, as well as in Syria, where they have a rather forward position. So I think there is some concern about, exactly what Israel's intent is in the region. And I think there's some sense about a need for some kind of balance. So that also is going into their calculation now. Of course, the last stage of what has happened in the last few days, we did see one of the Gulf states directly attacked. I mean, the attack was on the U.S. base in Qatar, but that's a direct missile attack from Iran on Qatar. And so there's a good question to ask, what now? How is that going to change their calculation? And the condemnation, of course, of that attack was very rapid and very strong by all of the Gulf states. Of course, I found it fascinating that after that attack took place, the Trump administration turned directly to Qatar and said, okay, now you make sure that Iran will now hold to a ceasefire. So it shows you that, I mean, the idea that this was sort of orchestrated and understood by the Qatar government, and that they do still have amongst the Gulf states the closer ties with Iran. But I don't think we should minimize that that's still an attack on, a Gulf state. I mean, it took place in their territory, and that precedent has been set. So there may be some kind of different calculations in how they're thinking. I think for the moment, though, for the Gulf states, their overall priority is not to allow this whole conflict to expand. They really are worried about just expanding zones of insecurity within the broader region. We could talk about Iraq and then extending into Syria. And of course, we had the attack, the terrorist attack by ISIS in Syria, just as a reminder, I think, to all of us that there are a lot of territories out there that are not at all stable. And so I think throwing a hugely important country like Iran into that zone of absolute instability is not something that the Gulf states want to see happen.
Thank you, Kristen. Really interesting perspectives on the role of Gulf reactions is playing and the role of their diplomacy. We'll move this along a little bit, Alan, but I just wanted to also give you the chance, if you had any observations you wanted to make about the prospects for diplomacy sort of taking over and shaping this crisis going forward.
I mean, briefly, I'm not, when you're a diplomat, you have to be cautiously optimistic. Now that I'm retired, I can be wildly pessimistic. So I'm not too, I think diplomacy, as I said in my previous comments, is going to be very hard. Iran is not going to come to the table and say, please don't do it again. We will agree to no enrichment on our soil. We'll agree to stop missile production, and we'll stop funding those pesky proxies. That's not going to happen. They're going to dig in. Yeah, this has been, I started following Iran in 1984 during the Iran-Iraq War. This has replaced, I think, for many Iranians, the Iran-Iraq War as the motivating trauma that's going to guide them going forward, as I alluded to previously. So, I mean, I think the U.S. will declare victory. I think President Trump wants to move on. I think everyone's doing a victory lap. I think his attention, the U.S. administration attention to this will decrease. I think the U.S., unfortunately, government's capability to address this in an optimal manner, and I don't say this out of partisanship, has decreased. There's been a diminished role for the State Department, for the NSC. I think poor Mr. Witkoff has a very large plate in terms of all the things he's being asked to do. So I think the U.S. role, paradoxically, will be less than it has been and less than it should be. To a large extent, Israel's still driving the train. The central dynamic didn't change since day one. Israel moves down its target list. Okay? I mean, the U.S. bombing of the Fordo and these two other places was a terrifying sideshow. But just to put a bow on it, I would be pleasantly surprised if we get any sort of diplomatic motion or momentum as a result of what's happened in the last 11 days. And don't forget, we've still got snapback in mid-October. We've got the UNSCR, which, unless somebody does something, is going to lift UN sanctions on Iran come mid-October. So, yeah, tough situation.
Yeah. Iran gets a vote, but I guess the UN Security Council also gets a vote of sorts. Yeah. Mona, Kristen was talking a little bit about Israel's role in the region. I wanted to tease that out a little bit. What do you think this crisis has done to Israel's pursuit of normalization with Gulf countries? Has the Iran crisis damaged the prospects for the normalization, or had any impact on the Abraham Accord agreements that have been made, or is it largely a storm that has now passed, as some analysts say, and it won't have the kind of impact that, say, the Gaza crisis has had? What's your perception on that?
I'd like to just say one quick thing based on Alan's comments, which I meant to say before, because I think it's really important, and I would completely associate myself with this idea of a motivating trauma.
I thought you were going to come against me.
No. You reminded me of something that I think is critical to put down, because I think you're absolutely right about Iran and what its takeaways are. And I think it's important to lay down that one of its key takeaways may be that it must pursue a nuclear weapon, and that we talk about the key deterrent elements it had: missiles largely degraded, proxies largely unraveled, and frankly, again, it looks to the North Korea example. I know I'm not the first person to say this, it's been out there about in punditry, but I do think it's important to really lay down that Iran could well make the decision that its best recourse at this point is a sprint to even a crude nuclear weapon, which I would argue, therefore, again, highlights why diplomacy is so important. Now, whether diplomacy can resolve that or not is a very, very open question. But I did want to just sort of put a bow on your bow and say that. Damage prospects for normalization. Well, I mean, I think the prospects for normalization were pretty well in the deep freeze prior to all of this. And, you know, I think, and I'm not saying you're doing this, Bill, but I think sometimes analytically one may compartmentalize a little bit. Gaza and then this. And I don't think that's the case in the region. I think that the region, since October 7th and beyond, and Israel's military response, starting in Gaza, then Lebanon, then, you know, also now Syria in terms of the occupation of increasingly bigger swaths of Syria. It's, you know, hurling missiles at Yemen. Again, not unprovoked. So I want to be very clear. This is definitely a conflict. But I was speaking to a colleague the other day in the Gulf, and he said, you know, there's a madman running around the region right now with a gun, and it isn't Iran, it's Israel. And so I do think that given what we have witnessed over the past 20 months since Gaza and these incredible reverberations, which we can talk about, to include Syria, I would add, and now what we have seen over the last 12 days, I think the region is incredibly wary of Israel and the role that it is playing. And this notion of establishing hegemony over the region through military force, I think is extremely disquieting for the region, that it is setting the region on a path. There weren't many, and arguably no guardrails, but we really are in a Hobbesian, we are looking over the abyss of a Hobbesian Middle East, in which there really are no rules of the game, and might makes right. And I think for the region, which is so fatigued from more than 2 decades of conflict, this utterly upends that vision that they were promoting, which in their minds potentially could have included normalization with Israel. I mean, that was certainly the path prior to October 7th, but also, and I mean, colleagues may push back on this, also included integration of Iran. Because I think the watershed moment was 2019 with the attack on Abqaiq, and a decision and an understanding that, you know what, this ain't working for us. And I think an understanding Iran is here to stay, and we need to figure out a way to integrate them into the region. And this vision of de-escalation of conflict, of diversification of economies, of building out ties across the region to include maybe even, you know, now Syria and Lebanon, is a region that is a vision that really is founded on ending conflicts and not the perpetuation of conflict. And so I think, in a sense, what the Gulf has just witnessed is their nightmare scenario, and I think that therefore they are quite concerned about the role that Israel is playing, and that's going to make them, unfortunately, think more wary. I don't think there's a view that the storm has passed, and this is a country that they can now quickly return to normalcy and do business with overall.
Interesting. So, I mean, if I hear you right, you do believe that there are some consequences, maybe indirect, but that are going to reverberate over time with the whole paradigm of normalization with Israel.
Yeah, I mean, let's be clear. The Abraham Accord countries have maintained that, so that those haven't been deep sixed and that were blown up. So yes, but no, I do. I think that this is really giving the region pause as to how to proceed and what role Israel is going to be playing and how do they manage that. And I think that they are right now quite wary and concerned about the role that Israel is playing.
Kristen, could I follow up with you on this issue? What are you hearing from Gulf, either officials or in the media or people you speak to about this issue of a sort of the Gulf waking up and before sensing there was this huge sort of balance between Iran on the one hand and Israel on the other, and they're waking up to this reality of just it's Israel as this super dominant military power out in the region. Is it giving people pause? Do you sort of agree with the scenario that Mona has laid out, or do you see it a little differently?
Well, just to add something new to the conversation, I'll be a little bit more of a cynic. I think I stated the position, and I think that is how the Gulf states are seeing it. And I think particularly this government in Israel is particularly difficult to deal with. I mean, if you look at a country like the UAE, which was turning to Israel as a way, to some extent, to counter what they saw as a lot of extremism and you know, that comes out of Islamist movements and that kind of thing in the region. And now you've got a kind of, you know, some of the leadership, some of the people within the Israeli government are equally, quite fanatical. So I think it's a big problem for all the states, including the Abraham Accord states. I will just say, though, that I think the strategy that the Abraham Accord states took, really particularly the UAE, was one of thinking strategically about where the region was going and expecting kind of what Alan Ayres described, that the U.S. is just not going to be as invested. They're not going to be there to solve all our problems. They're not going to be doing all that diplomacy. They may not even be here to protect us to the degree that we need. So we need to look at the other powers in the region and decide what's going to be most beneficial for us, as the Gulf states that have, they have been increasing their own capabilities militarily. Obviously, their bigger capabilities are really in their huge investments and their move towards more technological sophistication and being the sort of hub for a global economy. And I think when they looked at Israel, they saw this could be a quite attractive partner in the sense of what they can offer, both in terms of intelligence, military kind of capabilities, but also in terms of technology, how their economy was, and all of these sorts of things. So I think, Israel looked like sort of a winning bet if you want to kind of lean towards a country that may help you in the balance of this new Hobbesian region. I really think Saudi Arabia was maybe looking at that, and it's a much more difficult calculation for Saudi Arabia, but maybe thinking like, okay, maybe that was a good bet. They're getting some advantages from this. But I see at least Saudi Arabia quite distinctively shifting kind of in this current environment, and especially what's been going on in Gaza, and thinking about the region. And Saudi Arabia has been really quite strong in trying to hold back Israel. I mean, of course, just before this conflict happened, the other consequence of it was that Saudi Arabia and France were supposed to be holding a summit at the UN to try to push other states to start to recognize Palestine directly as a way to kind of stop the bleeding there and have a legal principle to start to hold the Palestinians in place instead of seeing them being kind of driven from their territory. So I really do think that Saudi Arabia is looking at it differently. Their cooperation, too, on Syria looks a bit more distinct and is bringing them a little bit closer to Turkey, which is interesting, the other kind of power in the region, as Iran is a bit lessened. But I think what's happened recently, I don't know how those states will calculate that in a Hobbesian environment. I do see distinctions in their strategies, so that could play out over the long time. If Israel emerges as utterly the strongest power, maybe the UAE will want to double down on that a bit. But I just say it's a much more difficult environment to work in right now, though.
Mm-hmm. Thank you, Kristen. Alan, Iran, this is really maybe the final question on Iran until we go to the audience and see if they have questions they want to follow up. Iran has friends, Russia, China, India, of course. They haven't been very evident in this crisis, offering much help. How do you think Iran is going to be able to operate going forward with any help from friends, or are they on their own and the regime's been degraded and it's just going to stay weak?
At the risk of contradicting you, and I see Ali smiling, Iran has no friends. And this experience has reinforced that. There's a great saying in Persian that says basically, no one scratches my back other than the nail of my own finger. Iran realized during the Iran-Iraq war that the international community was no help, that it was on it alone. If you ever listen to Khamenei in Persian, he's always talking about khod kafai muqawamat, which is, khod kafai is by yourselfness. What is that? Self-sufficiency, thanks. Self-sufficiency and, resistance. So this has reinforced Iran in thinking they're on it by themselves. Now they have allies. I mean, Syria up until recently, was the only Arab country that was that backed it during the Iran-Iraq war. So that was a long-term strategic alliance. But the mindset in Iran right now is we are on our own, at a time when, even before this started, Iran was on its heels. Its economy was horrible. It was having rolling blackouts that was cutting needed electricity to its industry, to homes, massive inflation, high inflation, unemployment, water shortages, problems relating to climate change. So Iran was not flourishing before this happened. And right now, as a result of all of this, it's going to get even worse. And unfortunately, Iran's going to have to be militarizing at the same time. So at a time when it even needs to focus even more on getting its own house in order, it won't be doing that. So much for butter. We need more guns. And again, Iran, sure, Russia will help. Russia has helped in the UN. China will help at the UN. Everyone will profit off of Iran's economic infirmities. China will get an even better deal on oil. But, Iran has got some serious reacting to do.
Thank you. Just a question, Kristen, I wonder if you would, I think you mentioned it, but just if you'd say a few words about the Gaza conflict and how that either folds into this Iran model or paradigm, or if it doesn't fold in, but it's just there and looms as in some ways an even greater catastrophe really in the region that the Gulf countries are trying to deal with and trying to navigate their way forward with?
Well, I think we've already kind of said quite a bit about it, that, October 7th is a big turning point. And I think I agree with you in where we are right now. And it's worth underlining again that this occurred, through an attack by Hamas at a time when everybody was trying to move on, right? Like, okay, we can just cauterize this Palestinian problem. Something in there with Israel, but, we've got bigger fish to fry. We've got other things. We've got our massive big plans. If we do put all of this conflict that we've had in the last few years, all of, which has now come down to actual states, Israel and Iran bombing each other directly. And now we have Iran directly bombing Qatar. It does kind of underline that the ability of this Palestinian, the inability to address the tragedy, really, of Palestinians never having a place for themselves or any kind of future to them, how it can still cause this kind of instability in the region. So I think probably we're moving in a period of nationalism. I think a lot of the states were hoping to just be able to focus on their own interests. Palestine doesn't have a state, so they're kind of left out of the whole thing. But I think it just shows you that there are these trends and these things that pull at the commonalities amongst the states too that haven't completely disappeared. And so I think it is really concerning. I think that kind of image that we have now, these big states that are, trying to play this big role as the center hubs of this new technology and pursuing their own national interests. We still have the Palestinian issue isn't dealt with. Syria is still out there. We just had ISIS do another attack. These kinds of things are still sort of elements that are going to require a lot of attention at a period when I don't know where the attention is going to come from.
Thank you, Kristen. We have about 10 minutes. I think I'll open it up and ask questions. Doug, you have one? Yep.
I'm going to exercise my right as kind of the guy in charge of this to ask the first question, because I've been trying to put myself in the mind of Donald Trump and what he is actually thinking about the future of Iran. Over the course of the past several months, he has said a number of things that are very positive about Iran, his desire for Iranian people to prosper. That Iran can now sell more oil to China. American companies want to invest in Iran and build the Iranian economy. Maybe this is really directed at Alan. Is there anything here that would resonate at all with the Iranian regime, the Iranian people? Is this an opportunity that Trump is trying to reframe U.S. relations with Tehran in the way that I think his trip a month and a half ago tried to reframe America's relations with the Gulf? In other words, focus on commercial benefit and economic development.
That's a great question. I do think President Trump is unique in that he does not seem to share the visceral, historical dislike, loathing of Iran that has been ambient in the U.S. government since 1979. You know, he was willing to do a deal with North Korea. He's willing to do a deal with Iran. But on the Iranian side, no. You know, Iran does not trust the U.S. The prevailing mindset that guides Iranian strategy is that regardless of what the U.S. says, the United States and its pawn Israel, in Iranian thinking, is trying to topple, not only is trying to topple the Iranian government, that's all it thinks about, okay? Ayatollah Khamenei and the ethos and the mindset that will survive him once he dies, unless they pick Hassan Khomeini to replace him, which is an interesting possibility, is that the U.S. is hell-bent on getting rid of the Islamic Republic. And also, the people running Iran, final point, they don't want an American investment. Sweet goodness, the IRGC is making lots of money off this enmity. So we saw this with JCPOA. They don't want to open to the West. God forbid, that kills their nest egg.
Thank you. Marcel, did you have a question?
Thank you. Well, first of all, thank you for a great panel, a very depressing one. But I'd like to share, as a retired State Department diplomat, I share Alan Ayer's wildly cynical perspective on the region. And I have a comment and maybe would welcome your feedback. I mean, you've all said exactly what I agree with in terms of we have an Iran now that is degraded, weakened, but it's not going to lay over and play dead. So in their minds, the first thing to do is to go after, as much as they can, towards a nuclear capability. At the same time, I think we have a region that hasn't been able to exercise any leverage, at least that I can see, on the role that Israel is playing. And I agree we have a seemingly strong and interventionist president, but I think I agree with what you said earlier, Alan, that in terms of the U.S. taking a very dynamic leading role in putting together a peace process or a regional perspective that would stabilize the region, I don't think they have the strength or the capacity. So from my perspective, Israel is really the strongest player here. And I don't think the Israeli government is at this point in time interested or cares about, expanding normalization with Saudi Arabia. They don't have much leverage on Israel. In my view, I wonder if you share it, I think Israel has a very clear strategy of not only degrading Iran, but being completely in control of the region and marginalizing anybody that is a threat to Israel. And I think that includes the Palestinians, very much so, what we're seeing in the West Bank and Gaza. And I think from the Gulf states' perspective, they look at this and they see if everything implodes, especially on the Palestinian issue, that has a lot of stability ramifications for them. But at the same time, I really do feel that their hands are tied in terms of how they can influence Israel. So my bottom line is that the real players here is Israel is going to be calling the shots for quite some time, whether we look at Syria or Iran or the Palestinians. So my question to you all, it's really a domestic question. Do we think America has the wherewithal to play a role that promotes stability? It has to support Israel's security, but Israel's hegemony is a very different ballgame here. And I think it has ramifications for U.S. interests in the region. So we really should be talking about Israel and the United States more than anyone else in the region.
Mm-hmm. Thank you. Thank you, Marcel. Maybe take one more question, and we'll allow one of the members of the panel to address both of those sets of issues. Ali, you had a question?
Good morning, and thank you for your brilliant presentations. I have a very, very short comment and a question. The comment is that the IRGC was really never against a nuclear agreement with the U.S. They did not oppose the JCPOA. Why? Because they were hoping that they could engage in joint ventures with U.S. companies. So they were not opposing the influx of foreign direct investments into Iran, not at all. And the problem, obviously, was the terrorist designation of the IRGC during the first Trump administration, which made it completely impossible for IRGC-owned businesses to engage in that kind of businesses with foreign companies. The question is more about the debate among IRGC strategists. What they are telling right now, and they have been telling this actually for some time, is that Iran's détente with Saudi Arabia was a mistake, because it persuaded the world that Iran would not be bombing the regional oil infrastructure. In other words, the US could attack Iran and it would not entail any cost for the global economy. And therefore they argued that in the future, Iran should be doing the same thing as the DPRK did with South Korea. They took the city of Seoul hostage. They said, if you bomb our nuclear facilities, we will bomb Seoul with our artillery. Now, if it is technically feasible for Iran to build a nuclear weapon now, would it not be natural to expect the IRGC to take the regional oil infrastructure hostage?
Interesting question. Let's take one more question, and then I'll give panel members a chance to respond to what they've heard and wrap up with a short minute each.
Thanks very much. I just had a sort of quick clarifying question. I mean, I think we've all come to this point where we think it's very probable that Iran is racing for breakout of some kind of nuclear capability, crude bomb, whatever it is. Could I just hear some thoughts about what does that really look like? What is that? I mean, it's presumably not rebuilding a lot of this infrastructure. Is it? Do they get help from anyone abroad? We heard they don't have any friends, but are there factions in wherever, North Korea, Russia, Pakistan, whatever it might be, that could support them doing that? Like, what does it mean? What's the timeline for something like that? Just to have a demonstration of some nuclear capability that gives them a little bit of security.
And let's see. Yes, one final remark or question?
Yeah, hi. So most of my questions have been answered, but I have one question that you can provide insight on. What is this equation between Trump and Netanyahu relationship? Does he trust we have seen a lot of comments from President Trump. So I was wondering how much leverage he has on Netanyahu to end this crisis. So I'd appreciate it.
Thank you. So I think probably with the time, I'll give you each maybe a minute to wrap up. A lot has been expressed in the audience about Iran's possible race for a bomb. Marcel's interesting comments, which also fold into the last speaker's comments about the domestic situation and how the U.S. is going to possibly deal with this new situation in the Middle East, where Israel is appearing to be so dominant going forward. So I'll give each of you a minute to tackle any pieces of those you'd like to. Mona, shall I let you start?
Sure. Lots there. Let me maybe try to tackle this question, Ambassador Wahbi, that you raised about Israel and versus the Gulf. And I mean, for me, I would note, in my view, kind of to this point about October 7th being a watershed, I would note even before that the region is has been at a hinge moment. We are definitely seeing, the old order that had prevailed for decades vanishing, a new order emerging, and competing visions for that order. And I think we're seeing it now in stark relief, in a sense, of Israel, through military might seeking to establish some sort of hegemony. I guess I would not, number one, 100% count that that's the way things will go. I think Israel itself has issues, bandwidth issues. It's already stretched quite thin in terms of some of these various conflicts it's engaged in, and also that there are economic implications for what has happened. Israel cannot wage war for years on end. Already they're engaged in the longest conflict that they've been engaged in since their history. So there's some constraints on the Israeli side, and I guess I'd say On the regional side, on the Gulf side in particular, in this emerging order, it's my view that the Gulf is the center of gravity. And I think we need to really pick through and understand better the agency they bring to the table, which I would argue is quite significant. I think this last go-round of the past several months has been probably, I would think, a real wake-up call for the region about how to more effectively use its leverage, how to think more strategically, how to insulate against what, when I was in Oman a month ago, they were fearing, that actually the talks are moving. Actually, the Iranians are interested in billion and trillion dollar deals, and they have learned to speak the language of Trump and even tweet in the language of Trump, with the case of AGSI in all caps. And that I think the region actually felt it was on the verge of something significant, and then the whole thing was derailed. And I think it's on strategists in the region to really sit back and take some lessons here and learn. But the battle for the regional order is far from over, is what I think.
Thank you, Mona. Kristen, any wrap-up remark?
Just to Ali's comments and also following on Mona about the Gulf states, I do think that they're the center, and especially when we have the vision that they want to have, they're the center, which means we have a relatively stable region with investment, with lots of trade going back and forth, then they're the center. When it turns into this kind of landscape, I'm not so sure they're the center of the bombs flying, missiles flying back and forth over their heads. So I think their ability is a bit more limited. I think we should recognize, and as Ali kind of underlined, that they were able to change the strategic calculus of Iran in this conflict. Iran has not struck any of the, a Petro Diplomacy thing. They have not struck oil facilities anywhere, primarily in the Gulf states. And I think that is because now Iran had something to lose, because they actually have made those deals and those understandings with the Gulf states. If they attack them, then they could lose those. So their actions have had consequences, but they're just not always the absolute decisive ones. And I think for the Gulf states, a lot of the things that they want to achieve, they can't do it on their own. They need a platform for doing things, and then they can do their investments. They can move quite well. But if the United States is not, like on Syria, I mean, when they talked them into lifting sanctions on Syria, then the Gulf states could move in and be very effective in trying to stabilize that situation. But they needed the U.S. to move first. And I think if we look to this question of the U.S. not being as strong a player, I mean, who made the arrangement between the détente between Saudi Arabia and Iran? It was China. Who is Saudi Arabia turning to now to try to calm or at least have some kind of diplomatic framework moving forward on Gaza? It was the French and Europe. So I think it just shows you that they're not finding the partner that they need to try to create this more stable environment where they can be the most influential partners out there.
Thank you, Kristen. Alan, 40 seconds. We're running up against the time.
Sure. I mean, I don't think the JCPOA was a fork in the road. I think the last fork in the road in bilateral relations with the U.S. was the Series B Conoco deal in '93 with Archie Dunham that went sideways at the last second. Secondly, I don't like the word race in terms of racing for a nuclear weapon. Iran is very deliberate. One of the things we saw with the Qatar strike was that the same conservative, prudent, risk-averse thinking that could have died with all the Iranian generals who died is still there. So they will move toward a nuclear weapon or closer to it, but they're really good at diplomacy. Europe, although largely irrelevant, will play a role, at least because they're the only ones who can do snapback, the E3. So Iran will lobby Europe, and also Iran will be focusing on the Gulf countries, on KSA and the UAE, because they know that those guys have President Trump on speed dial.
Thank you. Thank you, everyone.
So everybody, I invite you to take a break. We've got about 20 minutes. We will reconvene here with our panel on GCC and the new energy order promptly at 11:30.
wish to come in and participate in what is, I'm sure, going to be a very interesting conversation. Okay, good. It worked. You know, a woman's, they say in opera, a woman's voice carries a lot better than a tenor's. So a soprano, I'm a soprano today. But when I wrote the agenda, I had no idea we were going to be where we are today. So there's a lot of elephants that are not mentioned in there. And I was actually in Paris for an Arab Energy Club meeting, and it was surprising that nobody really wanted to touch upon the more sensitive issues at hand. And that was before the attack on Iran by the United States. But I left Dubai, God, about 10 days ago, and we had to dodge Missile Alley, as they're calling it now, because we were stuck on the plane for about an hour because so much airspace is closed that we had to go one way, and it became very, very congested. And one of the consequences, I think, of what's happening now, and we're not really talking about it very much, and you know, I'd like to hear Tim's opinion on how it's going to impact the economies of the Gulf region, because what we're seeing, and the theme of what I wanted to talk about before all the madness, was how the Gulf states, the national oil companies in the Gulf states have become more assertive. They've become more global. There's not so much regional integration, because I think there's still a lot of mistrust, which is why I was a bit surprised to see everybody in the GCC, the Arab countries, sort of rising to the defense of Qatar. They boycotted just a few years earlier. So, you know, today is my enemy's enemy is my friend, and all that kind of stuff. And what I find really surprising is, you know, they've had, they are cash rich, the UAE, Saudi Arabia. The economies are doing quite well, despite ups and downs and volatility in oil. But it's not being translated. They are investing. They've gone global. We see a lot of investment in US LNG. We see it in Australia, in Africa. But we're not seeing that kind of clout being translated into sort of political, diplomatic pressure to sort of try to resolve all these issues that we're facing at the moment. So I have a really excellent panel here. I couldn't ask for better. And I'm going to start from sort of in order to my left. So we have Colby Conley, who's a senior fellow in the Economics and Energy Program at the Middle East Institute, and he's a senior analyst at Energy Intelligence. Sorry, I meant to my far left. Sorry. I'm still a bit jet lagged. I've done about 3 continents already. Colby's a friend of AGSIW. We've been together for a long time. He's been here many times, and he looks at political trends in the Middle East, North Africa, including oil markets, OPEC plus geopolitics, and the regional effects of the energy transition. He also contributes to competitive intelligence research, looking at corporate strategies and developments in the region. So, Colby, nice to have you back with us. Of course, Karen Young needs no introduction. She's very well known. She's a political economist focusing on the Gulf, broader Middle East and North Africa region, and the intersection of energy, finance and security. She's a senior research scholar at the Columbia University Center on Global Energy Policy. She was a senior fellow and funding director of the Program on Economics and Energy in the Middle East Institute, and a resident scholar at the American Scholar. Sorry, I'm really not doing too well at the American Enterprises. Yeah, I know. It's a long list, so I'm going to stop. You can read it on the website. And last but not least is Philip Cornell, who's a non-resident senior fellow at the Atlantic Council's Global Energy Center. He's a specialist in energy and foreign policy, global energy markets and regulatory issues, critical energy infrastructure protection, energy security strategy and policy, Saudi oil policy, Gulf energy economics, and blah. Okay, yes, I'll stop. It's not embarrassing, and I'm not going to introduce myself because, I've been doing this for a very long time, but I noticed something today. We've just, the Energy Institute, where I'm a fellow and on the board of their Middle East branch, has put out the statistical review of energy, which will come out officially on the 26th. And what I saw from the advanced copy is that emissions are rising for the 4th year they've risen, which, considering we're seeing electrification, considering we're seeing so much investment in renewables, and a lot of it in the Gulf states. And I think that is something that doesn't get so much notice. There was a time when I used to say, you know, Petro Diplomacy, we should maybe get rid of the petrol, but now it's in vogue again, right? So we are seeing investments as sort of a two-track investment policy in renewables alongside oil and gas, because we need it. And I look at the market today and I'm thinking, why is it fallen below 70 when there's so much uncertainty? You know, talk about the Strait of Hormuz, and it's not just the signal jamming, it's the fact that we have this dark fleet that's bobbing around with GPS switched off. The risk is rising because you don't even know where these ships are. You know, they're doing ship-to-ship transfers, they're bobbing around, some of them appear to be on water, some of them appear to be on land. So there is still a risk, isn't there? We're seeing insurance rates go up, we're seeing a risk more maybe to LNG exports because oil has a way out of the region from Saudi Arabia, from the UAE, outside of Strait of Hormuz, but not so much LNG, which has an impact on poor Qatar, which sort of bore the brunt of the response by Iran, even if it was sort of choreographed. So I wanted to sort of get your opinion of how we also saw Donald Trump in the Gulf being feted like, you know, the king, and this $2 trillion in investments that has been pledged. I mean, some of it already done, some of it to come, maybe. MOUs don't really mean anything, but is that going to be something that the Gulf states will use, or are they? Do you see them using it as sort of clout, political clout, to sort of influence events and diplomacy in the region and beyond? We've seen the UAE is very active now in North Africa, Sudan, not to everybody's liking, but is that something that you see happening because of the fact that they do have this sort of financial clout and the promise of investment into the US? But at the same time, what is it doing? What is this crisis doing to inward investment, to FDI, which I think Saudi Arabia badly needs at the moment? Their latest IPO is not doing too well. And the sort of basically the GCC economy, which is still pretty reliant on oil and gas. How is that going to have an impact? Is there going to be a flight of capital? Are we going to see are we going to see an impact on the GCC countries? Philip, I give it to you first.
Well, thanks very much, Kate, and it's really a pleasure to be back at the Petro Diplomacy conference. I think there were many parts to your question, but I guess we'll start off with talking about sort of the oil market and where it is right now, because to your point, that has a big impact on what's sort of the strength of the GCC economy as a result, and how does it sort of confer some power. In terms of where the oil price has gone just in very recent days and weeks as a result of this crisis, you know, you said you were surprised that we see it going down right now. I think that the oil market has been pretty sanguine around prices, particularly over the last week or so. There was a bit of a jump last Friday. But otherwise, look, traders in the market remember 2019 and attacks on Abqaiq, and several other sort of scares of disruption that have happened over the past decade, where sort of betting on the upside has always led to a loss and a burn. And so I think at this point, the market is very much thinking, look, we're going to bet on real disruption when we see it, and not on some kind of fear of that disruption. Pardon me. And I would say that's exactly the same response from OPEC, from representatives of GCC countries to OPEC, and we're going to see probably in the meeting in early July. I mean, all of the sounds have been, we're going to keep doing what had been planned in terms of ramping back up from a previous cut. But there's not going to be any sort of deviation of policy as a result of geopolitics that are happening until we see something that's quite real. And I think, you know, given what we've seen over the past couple of days and this sort of, at least for the moment, kind of fizzling of what had been a potential flashpoint, I think you see the market really sort of going back to what is the structural reality of the global oil market at the moment, which leans on almost all points to the downside, right? I mean, we see kind of a glutton supply, at least in the short term. Again, OPEC sort of raising their production again. Spare capacity is doing okay. Demand, I mean, especially when we go to a new round of tariff stuff later in the summer, all of that is a downside for global demand in the economy. So I think the trend broadly, at least in sort of the medium term, is very much to the downside for oil prices. But that certainly doesn't mean that the GCC is flush with cash and certainly has the power that you're talking about as kind of a capital source. And I think we see that very clearly when it comes to things like digital technology and AI that they're betting a lot of their future on. I think, to be really honest, many of them would be very happy not to have to deal with Iran, not to have to deal with Palestinians too much. They want to focus on, moving their economies forward, diversifying into sort of digital leadership, recognizing the sort of power that they can get out of that, or the leverage that they have given sort of cheap land, cheap energy, and all of that to come closer, for example, to the U.S. and to Trump, but also to look to alternatives. So I'll just give a quick mention about you mentioned a few North African countries, but I would say even thinking about the GCC and the power it's leveraging looking east to Asia, I think we all know that, GCC oil and gas supply, particularly from places like Saudi Arabia, for a long time now, I mean, the U.S. and North America has accounted for a very tiny bit of that. Almost all of it is going to Asia, and that's where growth is. And that's where growth is on the oil and gas side, also on power consumption, power demand. So for all the talk about AI power demand, if you talk to any of the producers of turbines, they'll tell you very much that, okay, maybe my stock price is affected by AI news, but almost all of those turbines are locked in emerging markets in South and Southeast Asia, as well as other parts of the world. So what they're doing going east, and I'll also plug very quickly at the Atlantic Council, we just launched last week, some work on what we call Arabian Sea and Indian Ocean. So looking at how, particularly over the last 4 to 6 years, this big push that seems to be pretty deliberate from a lot of GCC countries to upgrade relationships, not just in places like India, where there's been a fair amount of downstream investment from places like ADNOC and Saudi Aramco over the past decade, but even to places like Southeast Asia, where in the UAE in particular has been signing this sort of raft of comprehensive economic partnership agreements, have been investing significantly into clean energy and advanced energy technologies in places like Malaysia, where the UAE has made sort of a 10 gigawatt commitment, but also places that are looking at things like green hydrogen, which we can debate whether there's really a future there. Oman is really keen on it, and obviously there have been sort of agreements also from the Saudi PIF in places like South Asia over that. But all in all, using that kind of strength, I think that they have as a source of capital and a source of technology, as well as a source of fossil fuels, to upgrade those relationships and gain some political leverage. I mean, I think this plays into a bigger sort of narrative, which is if we see sort of fracturing of global order, whether it has to do with trade policy or geostrategic and security policy, not to be too sort of IR wonky about it, but some kind of balancing instinct. So as sort of before there had been sort of pretty clear focus on big pole partners, whether that was Washington, whether that was Beijing, whether that was Europe. And I think there's an instinct over the past several years has been to sort of revisit some of those second-tier relationships in the near area where there just happens to be great markets that are booming, but also to sort of sort of hedge, I would say, some of their relationships as they do, much to your point, think about going more international, thinking about having a more independent strategic orientation. And that has meant diversification, both from an economic point of view and from a political point of view. And I think that there's a lot of implications of that, which we can talk to. The last thing I'll say on that whole sort of balancing thesis, which I think does kind of hold true, there doesn't mean that, as we saw with Trump's visit to the GCC, that there's not a opportunity that they are going to take by hitching their wagon, particularly around things like digital and AI, where there's a clear partnership and there's a great source of capital going in both directions and technology exchange in order for them to keep leadership. So I think a lot of their mind is not so much on oil and gas markets. It's looking to what's coming in the future because they do see that that's where their bread is buttered. It's not just magnanimity.
Well, and as we saw from sort of extreme heat here, I think it's hotter here than it is in Dubai at the moment. But there is a climate emergency. I mean, they do need to do something. And they are. I mean, Masdar is one of the biggest investors in renewable and clean energy around the world, not just regional. Karen, your views. And we decided we're not going to have presentations. We're just going to have a sort of roundtable discussion. So,
yeah, thank you. Well, thank you, Kate, for organizing this whole agenda. And thank you to AGSIW for inviting me back. It's really good to be with you all. So I want to start with this question you asked you asked about economic statecraft. And I wrote a book about Gulf economic statecraft a couple of years ago. And it was focused on how the Gulf states have intervened really after the Arab Spring within the region, using economic tools to achieve political ends. So foreign direct investment, commitments of oil and gas in kind transfers, central bank deposits. They were really good at it for a decade, and they used it as transformative foreign policy, particularly in Egypt, but also in places like Sudan and Ethiopia, also in Pakistan, and even within the GCC, within countries like Oman. I think phase 2 is happening now, and it's very, very early. So this idea of using both the priority of economic diversification and transformation at home and using those tools as outward investment mechanisms, particularly through the creation of new adjacent sovereign funds like XRG, which is an ADNOC, basically, entity, is a mechanism to do so, but it's very much nascent and forward-looking. I wrote a paper almost 10 years ago about the Gulf's eastward turn, this idea of looking at the connections in Asia as the future of income for the region, and certainly not just in oil and gas, but particularly in petrochemicals and also in new energy. And that has come to pass, and certainly, as Philip describes, this is what matters. Trade flows from the Gulf to Asia are increasing. They're meant to increase even more in reciprocal trade in the next 10 years. But interestingly, 2024 was the first year in which foreign direct investment was at parity between the Middle East, mostly the Gulf, and Asia. So the Gulf is investing as much as in Asia as Asia is putting back into the Gulf. That's really important when you think about a political orientation and where those tools of economic statecraft might be directed. It's also true that, particularly in the use of these investment vehicles from the UAE, from Saudi Arabia, are very interested in the energy sector in rich countries, in the United States, but also in Europe. And that we saw in the president's visit, these commitments of investments into the U.S., mostly into LNG, but a lot also into the potential for renewable, even into CCS in Texas, which got axed by President Trump's decisions on, what the Department of Energy could give in terms of loans and benefits to some new energy efforts. And that signals, I think, to me, an effort to, yes, also have political influence. If you control most or a lot of the LNG terminals in Texas and Louisiana, or you have a 30% stake in the biggest ones, that is political influence, that is power, that is statecraft. But they're not exercising it to the point that we saw what they did within their own region after 2011. Maybe 10 years from now that will happen. So, kind of referencing back to the previous panel, and I think Ambassador Waba's very good question, what does that mean in terms of their relationship within the region and the hegemony that we're seeing emerge? They're not quite ready to exercise on a global scale in relationships with their key trade partners, China, India to the east, nor to what they see as still the security umbrella to the west. So I think it's something to watch, but it's also something that from a U.S. domestic and foreign policy perspective, we probably don't pay enough attention to. And this is very, very clear in the AI race, for example. What does it mean from a CFIUS perspective, to have such very, very strong and concentrated in the form of sovereign investors ownership of strategic assets in the United States and those ties. So this is something that I think we'll be looking at 10 years from now and thinking, oh golly, did we make a mistake, or did we make a really smart partnership? And I don't know that there's a clear answer, because there's still so much uncertainty in the stability of the region itself. I want to say more on the decoupling issue, but maybe I'll save that.
Okay.
Price and risk, regional risk.
Yeah, I think I just saw something, the war premium, which is maybe about $10, is now gone while people wait for the next stage of whatever is going to happen. And who knows? Colby, I wanted to hear your comments, and also where Russia stands in all of this, because, with all the investment in US LNG, the Europeans wanting to reduce their reliance on Russian gas by 2027. I don't think it's going to happen by then, but, that there's CBAM coming in, which is the carbon, basically a carbon tax by the EU. How's that going to impact? I think China's very worried about it, but I think where does Russia stand as sort of the partner within the OPEC Plus, which is sort of held together despite all the tensions, and how the sort of the global energy sort of landscape is changing, and how do you sort of maintain this alliance with Russia, but at the same time compete with Russia, particularly in Asia, and now with all these LNG investments.
Yeah, thanks, Kate, and thanks, of course, to AGSI for getting us together again for another fantastically timed Petro Diplomacy. I think that there's been a couple of those, so I don't know how you do it, but it definitely deserves recognition. Yeah, so I think, on the OPEC Plus front, it's been interesting, and I think the kind of investment patterns you've seen have been evident for a little while, that we're only unwinding the third layer of cuts at this point. We're still not into the first two that started really in 2022. And I don't know if I think it's one of the key motivators for the way some of the Gulf countries and their NOCs are changing their investment patterns, but you do see a lot more of an interest, not just in gas, but in other liquids as well, given that OPEC Plus quotas only govern crude output. So certainly, some of the projects that have been tendered with Jafurah in Saudi Arabia, and where a lot of Omani production has gone, has put a lot more emphasis on those other liquids as well. I think it's interesting when you look at where some of the recent upstream interest has been within the OPEC group. The UAE's upstream is of course always attractive, but you've got Total and BP now going back into Iraq, or at least expanding their footprints there. We'll have to see what the results of the Libyan bid round are, but if the reporting that's going on out there is any indication, there's certainly a lot of interest in it. And it's notable that I think, at least in the case of Iraq and Libya, one country doesn't have a quota and one basically acts like it doesn't have a quota. I think if you're looking longer term at how countries in the Gulf, particularly one that's had some disagreements with where its quota is in OPEC Plus over the years, will try to approach their upstream trajectory. I think that's something that has to at least be on the radar. It's too soon to speculate too much about what that does to the future of the organization. But if you're competing for a share of upstream investment that is, at least in theory, going to potentially shrink a bit over the coming years, we'll see. It's almost a non-statement that having to consider an OPEC quota is not an incentive, to say the least. I think that's something that the organization will have to think about in terms of what it has to do to keep itself together in the coming years. Obviously not a problem that Russia's going to have for the moment. Outside of the region, though, I think just building on some of the things that Karen said that were really important, is that the NOCs from a lot of countries, I mean, I tend to focus on Aramco, ADNOC, and Qatar Energy, which I think of as sort of the triumvirate of the most active firms in the region, and certainly the ones with the most interesting strategies. They're continuing this very, very strong shift from being a large group of, predominantly domestic resource holding operators to companies that are behaving a lot more like, I don't necessarily want to say IOCs because there's, I guess, changes in what that even is anymore, but their strategies are getting much more interesting to the point where they're active investors and portfolio managers in the oil and gas industry writ large, which changes a lot of the implications for their own future, but I think has a lot of implications for the future of the oil and gas industry itself if these firms are much bigger players outside of their home countries. It's mostly something that, I think Karen pointed out has come really in the LNG and chemicals space. New energy has sort of worked its way in there, but given that you've either got, some diminishing incentives for some of those things, or the fact that a lot of these countries already have a national champion that deals with that segment itself, there's not really a need for instance, Aramco to become a huge renewables developer when you've already got aqua power. That it just doesn't make sense. So, with the exception, I think, of Qatar Energy, it's really kind of a search for some advantaged gas and LNG assets. If you're Aramco, it's mostly LNG. XRG clearly has a different view to what they're interested in getting involved with. And to some of Karen's points, I think it's a little difficult sometimes to tell where the kind of, political and economic statecraft might be the governing part of the thinking there, but it's hard to say that they've gone into places that at least commercially don't make sense. They haven't done that. And there's an undeniable, I think, political advantage to investing in the U.S., obviously, at this time, although it's something that started before the second iteration of the Trump administration. It's something that they had alluded to the idea that they might do for some time. Aramco was talking about going into Port Arthur before the pandemic, and we've now just gotten to a point where some of these things are being realized. So I'd be a little bit cautious about reading into the political influence as the longest term part of the goal, because, who knows what the next political U-turn in the United States will be. It has to be a consideration, and at that point, maybe new energy investment becomes a bigger priority. We'll see. I think, I'm glad to know I'm maybe not the only hydrogen skeptic on the panel, but I've had plenty of proverbial fruit thrown at me at different events for saying some of those things. But, the idea, I think, behind that is one that'll be interesting to watch. But given some of the moves that have been made recently with Aramco kind of building a bigger portfolio of LNG offtake, a lot of which is going to come from the United States, XRG with this interest in Santos, that is something that I don't think is going to stop. I think it's definitely going to continue. As you especially see different institutions in the West, maybe more so Europe than the United States right now, a little hesitant to touch oil and gas. The Gulf NOCs will become increasingly prolific investors in this space. I think there are some long-term questions that brings up, particularly, post COP28 with that having been hosted in the UAE. I was in London a couple years ago before that happened, and there was an official from a Gulf energy ministry who was very, very proudly saying that with this coming to the Gulf, we're making ourselves, a stakeholder in this discussion rather than just an object of it. And if they are going to become bigger stakeholders in the oil and gas industry, what does that do to their influence on sort of the pace and the trajectory of the transition? I think there's a lot of pessimism about where the transition goes for the time being, but there was a big sea change in 2020 with the pandemic. We all rushed to a lot of conclusions that a lot of us have since done 180s on. So I think it's appropriate to think about where we're going from here with a little bit of the same thought. The second question I think about the trajectory of this is if prices are lower for longer, and as Phil was rightly pointing out, we're probably looking mostly to the downside right now. How long does this continue? I keep singling out XRG a lot, but they started with, I think, an $80 billion portfolio. They want to double that in size over the next couple of years. That's going to require an enormous amount of investment. So it'll be interesting to see how that materializes and what the behavior will look like in a period of lower for longer, if that's where we go. It's notable that none of these NOCs have really come out and made major revisions to their CapEx guidance during this period. So for the most part, for now, it seems like they're quite determined to invest through a downturn, or at least the down cycle. And then, again, I think just with the new energy part of this taking a bit of a backseat for the time being, I wouldn't write off the idea that it is something that, the NOCs or some of their counterpart national champions will come back to outside of their home countries. I mean, it's not taking the biggest hit in some places, but that I think, again, I just caution against too much of the nearer term thinking with a lot of the pessimism that there has been around the transition right now. And so I'll leave it there, but it's always a particularly exciting space to watch. And so I look forward to hearing what more we can get into about it.
Thank you, Colby. I think, in many ways, isn't the US setting the agenda for the sort of the climate agenda and the sort of the drill, baby, drill mantra, which I think is being sort of replicated. And we're seeing a lot of the major energy companies, as they like to call themselves now, increasing their upstream investment to the detriment of their sort of climate agenda. But talking about hydrogen skepticism, yes, I agree. And if you look at the number of investments, or the amount of investment that's been done since 2020, we're talking about 700 billion. But it's a tiny percentage that actually goes to find investment decisions because it's still too costly. And even Aramco, I think, said it recently. He said, if I don't have an off-taker for blue hydrogen, and blue hydrogen is sort of easier because the gas is there and it's cheap inside, that they cannot go ahead with the investment if they don't have an off-taker. And I think that's a problem for a lot of these green hydrogen projects. But I want to open it up now because we really do want to have a discussion around the table. So I'm going to stop talking and open it up. So if anybody has any questions, comments they'd like to make to our speakers, please go ahead. Yes.
Thank you. Hi. The comment I want to make is on drill, baby, drill. I don't think it's going to be done by the U.S. energy industry. It's going to be done by producers in the Middle East and Latin America and other places. So it'll be interesting that the president will be stating that mantra to the wrong audience. But and then on the new energy side, I think a lot of that's also going to be done by the same group, particularly in the Middle East, because they can. They don't have to ask anybody. They don't need to have rules set up. They don't have to have rules pulled away. So I don't know if that was a question. I guess it's two statements, but I think the Middle East in particular will be very relevant to incremental crude oil production and the continued creation of new energy.
No, I really appreciate that comment. I agree that, look, we listened to Paul at the very beginning of this morning saying that the number one need for his oil and gas company is policy and political stability. And if you look to the Gulf countries and the GCC, whether we're talking about oil and gas investments or whether we're talking about renewable energy investments, the cost of capital is remarkably low. And that doesn't have to do with any kind of public capital. That's literally because it's a safe place to invest and much lower cost of capital than you get here even. And so, I mean, I think when you are talking about either drill baby drill or going hard at electrification, it's going to follow where the demand is, and I think if we're talking about a trade-off between, let's say, established renewable energy technologies and natural gas for power generation, for example, I think that's literally going to follow the price. Where it's hydrogen, for example, where there's a clear trade-off in price, at least over the medium term, let's say 5 to 7 years, between price and emissions, yeah, they're going to be struggling. But that certainly doesn't mean that there's a huge amount of appetite, both in Middle East investors, Asian investors, and European investors. Since I've been in the mood of sort of touting our recent work, we also did some work with Ernie Moniz's shop that we launched last week as well, surveying energy sector investors, the top-level energy sector investors from sort of different regions. And the outlook by technology suite really reflected the kind of discussion we're having right now, which is for things like stable renewable energy grids, even things like nuclear, there was a very strong appetite. As you start going lower down the chain to things like hydrogen or to e-fuels or to CCS that are really much more policy supported, the appetite gets a lot weaker. So I think to your point, the GCC is extremely attractive because of the investment environment and because of the market there as much as anything else.
Can I add to that?
Yeah, please.
Yeah, you're exactly right. But the thing that I think is interesting about the sovereign investment vehicles that are especially in the renewable space is that they can be, and in the oil and gas space too, I should say, like XRG would fall into that. They can be extremely opportunistic in the environments they choose to enter, including in the United States. And they also have a very patient view of a return on investment. They can really take a long-term perspective, which, IOCs, most corporates can't. And that's why, yeah, there may not be such a drive to increase production in the Permian, certainly not at $60 a barrel, but there will be opportunities to buy up assets. And I think that's what we're seeing in LNG. That's what we're going to see even in like the carbon management, direct air capture, and CCS. But that's happening too in the way that the renewable companies, especially in like solar power generation from Aqua or from Masdar, are able to deploy across emerging markets. So I have a tracker at Columbia called the Gulf Renewable Power Tracker. And so we have a visualization of data of all of the Aqua and Masdar projects outside of the GCC, so on a global scale. And so these are, thinking about, Mona and I were talking about this last night, the opportunism for entering particularly a development finance space for infrastructure investment is really huge right now. The U.S. has stepped back. Our vehicles are not available, even when they were not operating on the same scale. USAID is not building power plants anywhere. The DFC is not building anything right now. And the Gulf states can enter that space. And I do think that has an economic statecraft element, even if it's not exercised at this moment. You've got a 30-year offtake agreement. You're linked in. You're friends. And so I think that is, it's just going to be enormous, the kind of relationship and business opportunity that creates. So, yeah, again, totally dominant, able to deploy quickly, able to create new investment vehicles, like that, and none of the paperwork or the kind of policy headaches that we encounter in our own landscape, particularly on the renewable side.
Yeah, there's no NIMBYism in our part of the world, and where I live in Dubai. I think part of it is, yes, there is stability. There is, you trust your leadership to do the right thing. You come to a place like the UAE, you look at Saudi Arabia, the way it's growing. I mean, it's quite amazing. But you've got the roads, you've got the infrastructure. People don't question their leaders. It's like, okay, decision is made, it gets implemented, and so. You go to London and you look at roadworks and they take months and months and months, whereas in Dubai, buildings sprout overnight, roadworks are done efficiently. So I think there isn't that kind of pushback. But Kobe, did you want to say anything, or shall I still open it up to more comments?
Yeah, no, I see another question out there. So
you see another question? Please go ahead.
Yeah, I have a question regarding OPEC Plus dynamics and what that might mean for relationships within the Gulf if we are, well, so you know, the Saudis are allegedly, in terms of increasing their production, are trying to punish, you know, Iraq among others. If we are in a world where oil demand is going to peak within the next few years, you know, what does that do to all of these relationships, and including among the Gulf producers themselves?
Yeah. No, it's a really good question. It's one I spend a lot of time thinking about. I mean, you know, I think I was trying to highlight where one of the potential cracks might eventually be in that longer term, especially if, you know, that you're looking at a demand situation where it's, I mean, there are, you know, plenty of varying opinions on when we hit a peak, but let's say, you know, 2030 or thereabouts. You know, there's going to be a drive to attract as much of this upstream investment and monetize resources while you still can, and a quota is no kind of incentive to do that. I think for the time being, a lot of the thinking can kind of be traced back to a certain saying about elephants in tents, and, you know, being better to have them inside than out. So it, you know, the members of the group clearly have benefit from being a part of it. If you know, if we do see a high profile exit, which there hasn't been in a while, then, you know, where the cracks may be emerging, if they do emerge, would be a lot more clear. I don't want to suggest that that's imminent, because clearly there's an effort to give certain members a wide enough berth to have an incentive to stay involved. But, you know, when you have overproducers like Kazakhstan, which is an interesting example because it's part of the plus of OPEC Plus. It's not a founding member, so it's got, you know, contracts that go back to the 90s to develop some of these mega projects. It doesn't have a very dominant NOC in the way that some of the other Gulf countries do, so the external capacities are much more of an essential feature for them. That's really important, and if it becomes this kind of existential thing where you're so dependent on these revenues and you want to just get the barrels out, because this is, you know, a pie that's eventually going to start shrinking, that's, I think, something that is going to continue to be a headache in the long term. And I think, you know, the amount of times that you are able to invoke the one real tool to punish overproducers, which is really just to raise production, and there's only a handful of members in the group that can really do that. Most of the spare capacity is in the same place. That kind of a threat is eventually going to, in theory, become, you know, less impactful. But, you know, we have to see. In the short term, I really think that everyone that is involved is going to benefit more by being a member than by, you know, looking for the door. And I, you know, it's going to take a lot for that to change.
I was going to add to that. I mean, I've been looking at OPEC for, God, a very long time, decades. And it seems to me these days, you know, these quotas are more suggestions than actual quotas, because, you know, you look at Kazakhstan, you look at Iraq, which is overproducing, they're supposed to make up for it. So on paper, it looks like they're increasing production, but in reality, they're not. And if you're an investor and you're looking at IEA and OPEC forecasts, I mean, the IEA says from 2028, demand is going to fall dramatically to peak by 2030, and it's going to slow to a trickle in the last 2 years of the decade. Whereas if you look at the long-term projections, OPEC sees demand continuing for its oil. But if the IEA is correct, and in fact, I think the difference is about 50 million barrels between the IEA's forecast, long-term forecast, and the OPEC, which is huge, and the diversity, and the relationship between the two is becoming quite tense. But if the IEA is correct, and they're talking about, you know, demand being driven by petrochemicals, gas demand by electrification and so on, and EVs, they're far more pessimistic on demand growth than the OPEC is, then it's going to become more difficult for the OPEC countries to maintain this cohesion, because the UAE is producing above quota as well. We don't talk about it very much, but they are. We don't really know the exact number. But they've been allowed to do it because in order to maintain that cohesion. And I think, the reason why they started increasing production now when things were so uncertain is because they can. There is some demand and it's a good time for them to do it. But I don't think it's only to punish the overproducers. I think there's, it's like, let's make hay while the sun shines. And I think they're doing that now and they'll also complete it. But I think it's a very uncertain time. But they have held together. I mean, if you look at OPEC's history and OPEC Plus now with Russia and Saudi Arabia, I think they find that alliance quite useful for both. It gives Russia a sort of international platform of sorts. And they've held together through the Iran-Iraq war, the invasion of Kuwait, they've managed it. So we have more questions, I think. Sorry, kept you waiting. But.
Hi, it's Mimi Burke from Brownstein. I just came from a meeting this morning at the Embassy of Egypt, and they shared with us some of their new financial burdens with this conflict, the new conflict in the Middle East, because they receive some of their oil through the pipeline in Israel that was closed down in the past days. And they have to scramble in the high usage months of the summer to find alternate measures to fill their needs. Could you talk a little bit about how this very short war has affected some of the countries in the region or elsewhere in their new financial consideration with energy?
I'm just going to make one comment. It's actually Israeli gas which keeps it going, which keeps the lights on in Egypt. And yes, they shut down some of the fields protectively, two of the large offshore Mediterranean fields. And I think one of the problems Egypt has at the moment is that they have ordered these floating LNG import facilities, which haven't been all connected because they haven't got the infrastructure ready yet to connect them. So I think they've got one. They're importing more LNG at great cost, so that's also, a burden on the economy, plus the fact that Suez Canal revenues are down. So I think they are very reliant on Israeli gas, and the fact that they're having to import so much LNG to keep things going. And because I think there's also limitations as to how much can come through the pipeline from Israel. And until they expand it, and they are doing it, they are going to be needing to import a lot more. So anybody else have something to say on, and you mentioned, I think you mentioned it, Karen, about the fact that the GCC countries were putting a lot of cash investment into Egypt. And I wonder if we can add to that and say, are they going to do the same with Syria?
No, they won't. So the Egyptian case is really interesting. Also, there was a pivot after sort of the use of economic statecraft from 2011 to about 2018, when it started to slow down. And then the most recent cash injections into Egypt from the UAE have been a land purchase, the Ras Al Hekma, which basically they took about $10 billion, which had been a central bank deposit, and used it as kind of a down payment for a $35 billion land deal. So no more free money. They want a hard asset in return. But the thing about the shutting down the Leviathan field was it was a protective measure, right? It was not because the asset was hit in Israel. And that caused Egypt to then have to go to spot markets to buy LNG more expensively, and it's a total burden for them, absolutely. But it was actually, if we talk about oil and gas infrastructure in the region, which has been targeted in this war, it's in Israel. It was the Haifa refinery which was hit. And that causes a tremendous burden on Israel. They're having to import now about 50,000 barrels a day of jet fuel to keep those planes flying over Iran, because they do not have capacity to refine diesel or jet fuel or anything else right now. There are other major refineries in Ashdod, and it's unfortunately offline for repairs. So, they've got themselves in a real pickle if the cost of this war is, maybe $1 billion a day for Israel, and add to that their energy needs. So they are affected, but certainly, yes, Egypt is under tremendous stress. And the worst thing that can happen is that they start seeing those sort of sentiment of investors change, some, sort of movement of capital flight, or, something to that degree, which I don't think we've really seen yet.
Of course, some of that oil used to come from Kurdistan to Israel. And of course, that's stopped now if Soma is going to be marketing it. But Karen, you said no, they won't do the same in Syria. I mean, I would have thought that it would be in Saudi Arabia's interest having Syria so close.
Yeah, I mean, they paid the arrears to the World Bank. That wasn't really any money. And then the Qataris committed, I think, $7 billion basically for electricity generation. But that is not enough to really jumpstart and create the provision of electricity for the entire territory of Syria. For that, we really need major, major investment in rethinking of what the Syrian grid would look like, what maybe distributed power could do in Syria. We're so far away from a solution just to meet sort of basic infrastructure demands in Syria, which has, of course, had no investment for many, many years.
Any other questions? Yeah, please, go ahead.
Not a question, but to push back a bit on this, I think a view coming from, I got the sense from the panel is that all the GCC countries are awash with cash at the moment, which I don't think is the case in Saudi now. And, you know, I think particularly if you ride on oil prices are going to be, you know, to the downside from where they are. Saudi's got some very tough decisions to make in terms of all of the commitments it's made domestically and internationally. So I think the environment where Saudi money was flowing very liberally in the last 3 years is probably not going to be the case going forward at these oil prices. Where that impact, clearly Aramco so far, capital spending has remained very high and the hit's been on the dividend. Whether that continues is going to be a trade-off by, you know, where does this money want to go? Is it PIF government, Aramco, is it elsewhere? So I guess I would be less sanguine about what the investment...
I think, at a lowest point today. It's been in a long time.
But But what about, I mean, the sovereign wealth funds are still flush. I mean, we're talking state budget as opposed to, or can we...
Well, I think they have so many commitments, and where the money is tied up is in a lot of projects domestically that are not complete for a long time, and they've benefited hugely from asset transfers from elsewhere in the public sector, which have largely now been exhausted. I mean, I'm sure they're not all being exhausted, but a lot of the easy ones have already taken place. So, yeah.
And maybe I would just add to that, in some international kind of boondoggles. I mean, I'm thinking about Ratnagiri in India, which from 2020, 2021 was sort of the biggest outward project investment from the Gulf, you know, in a long time. I mean, excuse the graph, and that's obviously in a mess just now, whether it's going to stay functional. So I think execution matters.
Any other comments? No. Sorry, Rachel, yes.
Only if we have time, because otherwise.
Yeah, we have. Hang on.
Just a thought that we might play into a little bit more, but in this context of new energy order, I think this sort of question mark about Saudi Arabia and the UAE in particular in critical mineral space, I think is an interesting one, which we can save our time for after lunch. But I had a question for Colby. You mentioned XRG having sort of different criteria, and I think across the panel, you folks talked about how investments in the U.S. and the region are being considered. But I'm wondering if there's any more to be said about other jurisdictions, you know, places like, you know, Australia, how, or just more generally, are there things you're picking up about new geographies across the board? You know, in the last sort of year or two, you know, we're in a world where contracts are thinking about flexibility because of tariffs. Are there any shifts going on?
Yeah, I mean, on the Australia question, I don't want this to sound like a cop-out, but I remember hearing that the Santos thing was under consideration just in the last week or so, so I'm admittedly a little bit behind on that, and I know that you know, there are other investors that have looked into Santos in the past and walked away. So I think some of those things... Yeah, I think some of those things are still open questions. I mean, if you look at what the criteria has been on a lot of the gas and LNG, for XRG, it's usually gas that it's usually producing assets that have an LNG linkage or some kind of existing connection to other markets, right? They're not getting into this for exploration for the most part. I think Egypt might be a bit of an exception to that, but I think where you see some of those having popped up in the past, that might be a consideration. Off the top of my head, it's a little more difficult to say where that is. I don't want to say Cyprus because we keep coming back to the East Med when I think we don't always need to. But I think that's part of what you'll see going forward. And I think, the policy landscape probably has to change for a lot of the new energy considerations to come more front and center. Otherwise, it's basically chemicals, right? So, Karen, I don't know if there's anything.
I had just jotted down in my notes before the places where XRG has invested recently, and it's the Santos consideration in Australia, thinking about BP's LNG assets, 30% stake in an Azerbaijan field, 49% stake in an Egyptian company, 38% stake in a Turkmenistan block, 10% stake in a Mozambique lease, and then there are interesting things like who they choose as partners. So, like the Santos would be with Carlyle and ADQ, or they've made interesting deals with Occidental, which Occidental has work in the UAE, and then the UAE might invest in Oxy's like DAC in Texas. So the ability to make trade-offs in that way, I think, particularly with IOCs, is super interesting.
Yeah, that's another important point too, because unconventionals are extremely important for the UAE's domestic gas growth. And if they do go up the value chain in the U.S., as they've basically said they're going to do, that's where it leads you.
Maybe I'll just one final comment along the same lines. I was in Oman just a couple months ago, just when the tariffs were still on before they had been taken off. So to your point, kind of how trade policy is affecting tech transfer, and speaking to a local sort of oil field services firm that was doing things like they were trying to source in their supply chain explosives at the end of the drill bit for unconventional, and had been sort of in a relationship with American suppliers for decades. And suddenly there was a question for a relatively smaller player: how do I sort of rebalance my supply chain in the face of these potential tariffs? And I think the answer was these things are remarkably sticky, because even if there are Russian, German alternative suppliers that they can go to, so much of this is calibrated specifically for the Omani rock in this case, and it's sort of compliant with the rest of the technology throughout their suite. So that was something that really struck me, that actually reorienting those supply chains within the oil and gas sector is a lot stickier than just than we think. So that uncertainty is going to prompt a lack of movement.
And to add to what Karen was talking about, all these investment opportunities, let's not forget that ADNOC is supposedly one of the possible suitors of BP and apparently they've had it's been on the cards, and they've prepared it some while back before. And that's another sort of example of their global ambition. I don't think it's going to happen, but if it does, it'll be bits and pieces of BP, not the whole thing. And I think it's lunchtime, so I'm going to thank my panel. I'm not going to keep you from lunch. We're 2 minutes over. And I want to thank Philip and Karen and Colby for being part of this conversation. Thanks.
And a little bit of the logistics for lunchtime. We're going to take the next hour. There is a lunch buffet set up in the hallway and outside. You can come back here in the room and eat. There are some tall tables outside in the hallway. The idea is to get people to kind of talk in small clumps and groups and figure out what you found most interesting this morning, so that you can debate it and get your ideas out there and with others as much as possible. So lunch buffet is open now, and we will return for the final session at 1:30 in this space. introduce the panel and the topic.
Yeah, thank you, Doug. It's great to be here. It's a wonderful couple of panels. We had a lot to work with and a lot to build upon. I think one of the great things about going last in a conference is that we understand exactly what needs to be done to be the best panel of the day. So we're going to do our best to make that happen. We have a great crew here up on this side of the table with Rachel, Rod, and my colleague Tim. Longer bios are online, so I won't waste any more of our time getting into that. Look, I think if you'll permit me to take us back to what feels like ages ago, all the way back to mid-May of 2025, Trump visited the region and spent, a number of days in the Gulf, in Saudi Arabia, in Qatar, and the UAE, drumming up a lot of interest in the U.S. Middle East economic corridor with a heavy emphasis on Gulf states. And of course, there was a very clear energy dimension to these ties, and I think there still is. Now, at the moment, everyone is focused for good reason on the Israel-Iran conflict, and of course, there's also a very obvious energy dimension to this conflict, which, I wrote in my notes earlier, it's unfolding conflict. Maybe it's a done conflict for now. We'll see when we leave this room. But if we zoom back out and think about the longer term of U.S. Gulf relations, the energy dimension of these ties are definitely going to come back into focus. There are overlapping energy interests between the U.S. and Gulf states. We'll talk a little bit about that today. This is also a domain where I think it's safe to say there are going to be frictions. I mean, I think the energy space is a source of friction in U.S. Gulf relations as well. Gulf investors have announced over the past few months major investments in the U.S. energy sector. We heard a little bit about that in the last panel, especially in the LNG space. ADNOC, XRG announcements in particular. Some of these announcements coming, by the way, just a couple of days ago. We know American oil and gas firms have been operating in the region for quite some time, and that will continue in the future. But I think more importantly for U.S. Gulf economic ties is the degree to which the region's energy sector and energy dynamics continue to help governments in the Gulf ensure that their economies are attractive investment destinations for the foreseeable future. But I don't think anyone here, at least myself, believes that the U.S. energy interests of our partners and allies in the Gulf are necessarily and always at the top of mind for President Trump. So I think this is to get us back to the potential for friction that I mentioned earlier. So with that, I want to turn this conversation over to our panelists and start with Rod, if you will. Can you give us your view of the major developments in the U.S. energy sector and also energy policies and policy decisions coming out of this White House, the second Trump administration, that you believe are most consequential for relations between the U.S. and Gulf states?
Thank you. Thank you very much for having me, Ambassador. It's a great pleasure to be here. And I have to say, actually, it's rather intimidating after the last few panels, because you actually have to live up to their standards. But hey-ho. Look, what are the most consequential? I mean, I think if you look at energy and you look at, as you mentioned, Gulf-U.S. relations sort of broadly, it's not just in the energy space. It's the second and third order consequences that may matter as much going through them. I think, possibly the most consequential thing about this administration is it has no joined-up thinking. And it's hard to try and have alignment and hard to try and sort of take full advantage of a circumstance if there's no joined-up thinking on energy, foreign policy, or anything else. There's certainly overlap, but how the administration sees that overlap and how the Gulf states see that overlap is, open to question whether, the degree to which that is the same perception. You can argue that the Gulf states played a blinder when Trump went to the region. but they did it by essentially responding to his desire to show large figures of investment and to have his feathers stroked. That doesn't necessarily make for a strategy. And similarly, as you mentioned about Trump, there's a big question about whether he really cares, as long as he gets the money and he gets the stature. I mean, this is an administration dedicated to an America first set of policies, and there's no sort of evidence to suggest so far that it's going to divert from that, and quite the contrary. So I think if you start to look then at some of, within that context of what I've said, some of the sort of areas and some of the specific policies, you can see some of that tension, and you can see some of the, well, it might be good, it might be bad, but perhaps over time we're just going to have to play the short game and work our way through it. I mean, the biggest one is energy dominance. And energy dominance, in some ways, the drill baby drill, which was on a tweet. Are they called tweets on Truth Social, or are they called Trumps? But anyway, there was a tweet that came out that sort of said, drill baby drill, we want higher output now. Well, that shows a slight lack of understanding of how the oil and gas patch works. But, again, it's something that is a direct challenge, particular time when markets are well supplied to the Gulf states. So there certainly isn't alignment there. And, the Gulf states are still cognizant as to what happened after 2015. And I think they still have that in the back of their mind. Now, their policies, and certainly OPEC's policies of late, may not suggest that, but I think it's something that they're watching. You get into a little bit of the rhetoric versus reality issue, but there's no doubt that drill baby drill here, if that happened, and there's a whole bunch of reasons why it may not, fiscal discipline, the nature of the plays, etc. But, if that happened, it would be a challenge to the Gulf, both in terms of market share and in terms of price. So, that's one aspect. I think, another aspect where you seemingly have overlap, but again, whether it's alignment is another matter, is on climate issues. This administration has been very clear in terms of eschewing concerns about climate change and moving and focusing very heavily on fossil fuels. I think I think some of the discussion or some of the rhetoric around the importance of energy policy, the importance of energy poverty and addressing energy poverty and policies around, promoting fossil fuels, that all aligns, or that sort of, again, is an overlap with the Gulf states. But for the Gulf states, renewables and new energy are important. They're seen as important source of investment. They're seen as important ways of developing the local economy. And they're seen as ways of dealing with local demand. And we mentioned earlier that, the Gulf states were looking to invest in the renewables sector in the United States as well. So those policies start to have friction. I think possibly one of the biggest areas of friction that isn't really sort of acknowledged may come on issues to do with clean barrels and the carbon footprint of barrels. The Gulf states, Saudi Arabia in particular, sort of started this. The UAE has pursued it more recently. The notion of having the lowest carbon footprint barrel. The Saudis are tremendously proud that, a nature study, which in part they helped fund, but a nature study found that Saudi barrels were the cleanest after Denmark in terms of Scope 1 emissions. And that, for them, I think, is a competitive advantage as they look to energy transitions, a way to say that as carbon, as emissions become more important, you may start to have premiums and discounts on barrels on the basis of market perception to that. We're not there yet, but that's a gamble for 25 years' time, for 2050. And for them, the US stepping back from that, I think, goes against it. And then finally, you just have what we're seeing in terms of politics. And again, overlap, yes, but alignment, absolutely not. So the oil market risk that you're seeing at the moment certainly isn't something that the Gulf states, in particular the big Gulf producers, would want to see. I mean, traders love volatility. That's how you make money. Producers don't. They want the reliability that Paul talked about earlier. So when you have a president who, you know, on one day is saying we have to remove the Supreme, or we should think about regime change in Iran, and today is announcing Iran can now sell oil to China, you know, apparently Trump has approved it. You start to get some of that disconnect. And I think the other area where you're going to see that is tariffs, where you have an up and down on tariffs, uncertainty on tariffs. I mean, that hits supply and that hits demand. And at a time when the Gulf states are trying to manage a delicate market and one that has a lot of downside risk for them in terms of price, it's hard to see how U.S. policy is benefit. So it's a mixed bag. As it goes back to this, I think two things: lack of joined up thinking and America first being the dominant thought, which makes alliance of any sort much, much more difficult.
Great. We're going to get back to tariffs in just a minute with Rachel. But before we do, I want to go over to Tim. Hey, Tim, what's at stake for Gulf states here, especially Saudi Arabia? I mean, when you look at the U.S. Energy sector and policies, related policies, where are you seeing the impact on the economies of the Saudi economy and also government finances? And you know, you've been looking at the Saudi economy for quite some time. Can you give us a sense of the kind of historical dynamics at play, and to what degree what you're seeing now may mark a departure from kind of historical trends, potentially a new era, reason to reconsider and reassess what's going on here? Over to you, Tim.
Thanks, Rob. So, I mean, I guess I come at this from a very macro point of view, and I guess at that level I see, US and Saudi as being competitors in the global oil market. And, I think, if I look back to, the period in, 2014-16, the price drop and how OPEC and then OPEC Plus reacted was very much, response to what was happening in US output. Again, recently, not just the US, but other non-OPEC Plus producers with supply going up, it's created, the dilemma that OPEC Plus and Saudi have had recently. So I think while in, other areas, it may be not as, overtly competitive, at least my view in the crude sphere, it is basically a competitive relationship. What does that mean for for Saudi? I think in some senses, we're clearly not in a 2014-16 situation, but some of the pressures are not dissimilar to that period in terms of you have government spending having gone up quite sharply the last 3 years. You now have the additional financing need of the PIF and more broadly around Vision 2030. So while it's undoubtedly true there have been huge reforms in the Saudi economy over the last decade, I'm not fully convinced that the sort of pro-cyclicality of Saudi policy has changed now relative to 10 years ago. I mean, it's certainly probably diminished in the sense we've seen, less of an expenditure increase in response to high oil prices this time than we saw before, less budget overruns in terms of expenditure, but still quite significant budget overruns. And we're now in a situation where going back to the 2014-16 example, the central government itself had, minimal debt, large deposits at the central bank. If you take the net of those, it was about positive 50% of GDP. If you now take it, it's probably negative 20% of GDP. This is just at the central government level. So that's a huge change. It doesn't mean that Saudi is, short of financial assets, far from it. But I do think that there's less financial flexibility now, given the investments and the commitments that have been made than there has been earlier. On the plus side, I think the policy-making framework is much stronger now than it was previously, so they're probably in a better position where they can make decisions that they need to make. So I guess, in a sense, it goes back to the point I made in the panel this morning. I think if you look across the GCC, clearly UAE, Qatar, I think Kuwait as well, still are, clearly running, I think fiscal and external surpluses. Saudi this year is going to be running both a fiscal and an external deficit. So the amount of money that is going to be, there's going to be no new money to put out there. Either internationally, or is going to be tight in terms of the domestic financing, unless what they'll have to do is they'll either have to borrow or they'll have to liquidate existing assets and reallocate those. And I think this is coming at a time where the commitments that Saudi has made, both within Vision 2030, to Trump on the trip, outside of Vision 2030 in terms of the World Cup, the Expo, Asian Winter Games, and then potentially commitments that will be needed in the region in terms of rebuilding are huge. So I guess I have while it's not a, in a sense, a doomsday scenario, it's probably, from a financing point of view, a less optimistic view than the feeling that there's still a whole load of money and cash that's floating around ready to be invested at the moment. So I'll stop there.
Before you stop, can you just give us a quick, sense of today how much of Saudi government revenues are still dependent upon the oil and gas sector?
Yeah. So last year, if you look at the split in the central government revenue, about 60% was oil, 40% non-oil. But I think the question with the non-oil, of course, a lot of the non-oil revenue is from the value-added tax, which is linked to, private consumption has grown pretty strongly the last few years. So if there is a cutback in government spending, which I have to say at this stage, I think what the finance minister has suggested is there's not going to be a cutback and they'll just run a bigger deficit. But if there is a cutback, then does that begin to affect the value-added tax intake? So I think the real question is how independent is the non-oil revenue and indeed the non-oil economy from the oil price and oil revenue cycle?
Okay. Thanks, Tim. Look, that was really helpful for laying out some of the domestic dynamics that are at play within Saudi Arabia and how, they are directly linked to global energy dynamics. You also brought in some kind of historical perspective from 2014, 15, 16. It crossed my mind that during that period we didn't have tariffs. We didn't have the trade wars like we've seen. And before this last Israel-Iran war, the last war we were thinking about, which recent memory, was the trade war with China, really, was the big one that was on people's mind. So over to you, Rachel. We've got trade war that maybe has come to an uneasy truce, talk about some kind of trade deals, but also the deadline for the suspension of tariffs is also coming up in early July, if I'm not mistaken. So there's also, beyond the domestic picture, domestic finances, kind of importance of the oil and gas sector to government revenues and kind of oil and non-oil economies, there's also a macroeconomic picture here too, which is really important. So how does the U.S. administration's trade policy, tariffs and other instruments and measures, affect the energy markets and the energy interests of Gulf states? And also, if you could give us a sense of what views you're hearing from the region about what regional officials and investors are saying and thinking about some of the policies and the decisions coming here out of Washington on that front.
Yeah, I'll do my best. Lots of good questions there. Yeah, and I'm conscious of the fact that looking back, it wasn't until later in Trump's first term that you had the significant, I mean, they don't seem significant compared to the current tariffs, but the size, but relevant to the energy industry, you had U.S.-China trade war at that point, and it took a long time for U.S. exports of energy to China to recover. So I think we can sort of come back to that at a later point, also relevant with the sort of tweet or post or Trump from this morning about Iran. So yeah, I think from the view from the region, I think, what I was hearing even, in sort of in the transition period was, in the Gulf, we don't have to worry about tariffs. We don't trade that much with the U.S. We're willing to invest. This is something not a big deal. And I think some of the rhetoric around the president's visit a couple months ago kind of maybe bore that out, but the indirect effects are very significant. I think the previous panel went into that, and Rod, I think, highlighted that as well. We have both this element that on the one hand, tariffs are increasing the cost of production in the United States, especially the steel and aluminum tariffs. It's a little bit of a mixed story because demand has fallen so much that things like steel pipe have actually not increased as much as you would expect, but there is really a price uncertainty of the cost structure in the United States. So to Rod's point about the U.S. and Saudi Arabia, the U.S. and the Gulf on oil are competitors. Maybe there's some that say, well, maybe there's a little more market share, but the demand picture, this uncertainty about global growth, I think is the biggest one, and that ties into Tim's points about availability of fiscal resources. Looking back to the president's trip from, a couple months ago now, there were two important policies that were introduced there that had almost nothing to do with tariffs, but are really important to GCC-U.S. relationship. Number one was something called the AI diffusion rule, which makes it easier theoretically for countries in the Gulf to import high-level chips. And the other one was an announcement of an expedited process for investors to be pre-approved via the CFIUS national security screening process. And both were policies when I was in the UAE in December have been real, and before that, real sources of concern, pain, and not just in the UAE, across the region. And both, I think, are some things that the administration has made progress on, but there's a lot of implementation details that haven't happened yet. The AI diffusion rule of the Biden administration that, was pulled at the last minute, but it's not clear that there's chips flowing yet. And I come back to that partly because if the Gulf is thinking in this area of alignment, well, there are goods that we'd like to buy from the U.S. There's been a willingness to say, well, we're willing to, and this is particularly the UAE and Saudi Arabia, we're willing to strip out Chinese infrastructure and use U.S. security-approved infrastructure for AI. There's still some implementation questions there. And I come back to AI, even though I'm diverting a little bit directly from energy, because in this global context of AI and data centers driving power demand, I think it's a very important one. On the CFIUS piece, the national security screening, I think that's also relevant for some of the investments that we were talking about in the last panel. Some agreements, offtake agreements, wouldn't really require a national security screening, but some of the investments we're talking about would. So that's something to watch. The other thing I'm hearing and seeing out of the region is this continued interest, it's part of a global trend, of signing other trade agreements. We've seen the UAE go out and do dozens of these CEPA agreements. This predates this Trump administration, but these are trade and investment partnerships. They started out with countries where there was a lot of government-to-government links, but they've extended beyond that. India has been a kind of key country where you can really point to results. But we're also seeing at the GCC level attempts to sign agreements with the Europeans, with the Brits. I mean, we'll see where that goes. I think one of the previous panel, Kate, you referenced CBAM. There's various issues out there. On the GCC specifically with trade agreements, it's notable that none of the countries are on this, as far as I'm aware, this top priority list of countries that the U.S. is trying frantically to get a concept of a deal together with. That's partly because bilateral trade right now is pretty small. These countries almost exclusively, buy more from the U.S. than they sell to the U.S. And these are all the GCC countries were pretty much all ones that got the 10% reciprocal tariff, the lowest level you could get. So it's not a key part of the agenda, but these other tools of economic statecraft, I would say, are more so. And then this question mark also of what capacity is there to partner with the U.S., both in investments at home but also abroad. I referenced really briefly in my question critical minerals, but it is one very much on the minds, particularly because, as you say, Robert, there was some kind of a truce, announced in London a couple weeks ago between the U.S. and China. Central to that agreement was trade in rare earth magnets. So far, there doesn't seem like that flow is coming yet. The U.S. and China both have been using export controls as a form of leverage. I think there's been a lot of interest from both the last administration and the current U.S. administration to perhaps work with Gulf countries globally on critical mineral development. There's probably been more hope than action there. Within the GCC, though, I think there's different approaches there. For Saudi Arabia, mining and critical minerals, it's an area of desired tech transfer, but it's also about domestic economic development and whether there could be mining and processing at home. For the UAE, it seems more about regional investments, and Qatar is in the mix a little bit there as well. But I think there's still this question mark about who's doing the processing and what asks the U.S. might have about the Chinese role in key supply chains. So I think, this is a moving picture, but I think the question mark, especially on the tariff side, does come back to the ability to actually deliver on predictable investment environment in the U.S. to attract this inward investment. And then there's the point that Tim was just making about the sending capital. But the tariffs, I think really, and the uncertainty around the tariffs, I think have been something that makes it difficult in the region and elsewhere to predict what demand is going to be.
I'm glad you brought up investment dynamics and also the attractiveness of the U.S. as an investment destination. I mean, this maybe will bring us back to Rod. You mentioned rhetoric versus reality. I mean, how do you distinguish the rhetoric versus the reality of some of the announcements we've heard? Gulf investments in U.S. energy, in LNG. I mean, some of this there are existing investments, but we've heard over the past couple of months, even in the past couple of days, pretty massive investment pledges being thrown around, long-term investment pledges. It seems to me that a lot of these, announcements are predicated upon, a big bet on AI infrastructure and the power needed to generate a lot of the infrastructure, data centers, and the like. How are you viewing these announcements? And back to the original question. I mean, can you help us separate a little fact from fiction, if that's possible?
I can do it I can probably do it at a level of 100,000 feet,
okay.
which is not bad at this moment in time, given the administration. Look, I think this separating between the two. There is undoubtedly an interest by the Gulf states to invest in the United States in key sectors. That has been there. That predates the Trump administration. It may be given added impetus, given judgment in terms of how to at least ensure that the Trump administration isn't going to turn against you. But there's also a great deal of self-interest there. I mean, I think some of the investments, certainly on the gas sector, make perfect sense. This is a sector that's going to expand. For countries like the UAE, there's a limited upside in terms of what they can do domestically. Why not take your capital and deploy it in somewhere where there is a chance of growth, where certainly you anticipate that the market is going to be there, and moving forwards, use that as an additional revenue stream. I think for the UAE in particular, and that also is some of the thinking around some of the oil deals that's done, is, if we have to cap our own production at home, why don't we also have revenue streams for production elsewhere that isn't going to be sort of judged under OPEC? But in the longer term, even more than that, then you have this basket of production that you keep moving forwards that you can then manage against what may be declines in demand. Again, and that's over a 25-year period, which is how long these deals run, if not longer. So I think there is a reality about wanting to do that. I think where the rhetoric comes in is the numbers. I mean, it seems sort of pretty simple to say, if you can get anywhere near $1 trillion, Trump loves you. If you can get to 600 billion, you'll get a nice hug. Once you start getting lower than that, then you're in sort of the same sort of band as a lot of other players, and woe betide you if you're only doing millions. And I think that's partly what we're seeing. I mean, I think, there's a great deal of creative accounting. I mean, going back to, my favorite example of this is, how two deals with, in Kurdistan recently by US companies could have been valued at $110 billion. I mean, I can see creative ways of doing it, but that isn't the value of the investment. So I think what you've got is number inflation, and it is the notion that you have to play to the sensibilities of a rather mercurial president who's shown that he's quite happy to sort of turn policy around on its head if it suits him or if he, depending on his mood. So I think that's where you're getting some of the rhetoric. And in terms of, I think also how much is actually committed versus what is a headline number. How much of this is aspirational? And I think the difference between aspirational and what you actually see invested is going to depend on how US policy evolves, how the relationship evolves, how the economy evolves, and some of the fiscal challenges and the financial challenges that the Gulf countries face. But right now, it doesn't kill you to say, I'm going to invest $1 trillion. I mean, Trump isn't going to be around to sort of work out whether that happens. So you've got the benefit of it.
Tim, how about in the other direction? I mean, if we think about Saudi Arabia, a country which is advancing a very ambitious, very expensive economic transformation plan with a big, at least stated emphasis on economic diversification away from oil. And at the same time, this is ongoing, and as this is ongoing, we know that it's going to depend on the continued ability of the government to generate healthy proceeds from exporting energy commodities. With that in mind, where would you rank, or how would you assign kind of a hierarchy of needs from a Saudi perspective? I mean, from policymakers in Riyadh in terms of the type of engagement they want to see with U.S. companies, with U.S. investors. I mean, you've got the energy dimension. We talked a little bit about overlap versus alignment. But, I mean, there's a much broader economic space that I think the Saudis are trying to tap into. And, I don't necessarily think that it's in the energy space when they're thinking about what they want to get, what they would like to get out of U.S. companies, investors. So could you give us a little more light, shed a little more light on that?
I mean, I think the answer is where would they like to see investment? I mean, everywhere, right? Everywhere that helps with the diversification agenda. But I mean, clearly, I guess, AI, broader tech, tourism, entertainment, mining, defense, I think these are areas where, they are looking to develop, clearly domestic industries. I guess in a sense we're talking inward FDI, investment from Saudi into the US, and I guess the two, in a sense, are part of the same deal often, right, in that you go and invest in a US company with the hope that it will come, or the understanding it'll come and set up within Saudi. So, I mean, I guess Lucid is, one very obvious example of that, but there are others as well. So I think that will continue. They will look to to promote that. Clearly, tourism is one area I think under the diversification agenda that's done really well. You look at the data; it's pretty impressive growth. Others less clear. Mining. There's clearly been a lot of focus on the sector. It's hard to see very much in the export data and the production data as yet, but I guess that's probably a longer time horizon, to see that. But again, I think the question goes more broadly is, with less resources, financial resources, and a lot of commitments, how do you begin to rebalance this? And I think from a economic point of view, clearly things that directly benefit your local citizens are going to be high priority. And I think though a lot of the stuff being done in the housing sector, for example, is probably relatively untouchable, I would think, in this environment. Things that are going to generate employment, is another area. But then you also then have, high-profile things that will be very embarrassing if they don't come off. So, you can make arguments right across the board for how you prioritise, these projects. Some are very close to the, heart of the Crown Prince. They're going to be hard. So, you can almost go through the whole, sort of investment agenda and make arguments why, parts are untouchable. So I think it's a very difficult question to answer, where if finances stay around current levels, where do you pull back? And I guess where you probably come out is it's going to be a bit of everything, I suspect.
Good. I think at this point we've got about 20 minutes left before the official hard stop of our panel. So I will open up for questions, and as and when they emerge, just either stick up your hand or put your name tag up. And in the meantime, I have a number of other questions I'm going to bug my panelists with. But are there any questions right now that anyone would like to jump in with? I see Mimi over there.
Hi, yeah, thanks for taking my question. I just have a question for Rachel on tariffs. And you mentioned the aluminum, steel tariffs, the 232 that the U.S. is looking at right now. It doesn't look like there's any changes in 232, but I know countries like Bahrain, who have a big presence in the aluminum industry, are very eager to hear. So what's your idea on that?
And Rachel, if you don't mind, I saw one other hand, so let's just take two at a time, and then we'll bite that off first. Okay.
Sure. Do you want me to take 232? Yeah, Mimi, I think really good question. So I think there is a really strong political commitment to protecting the U.S. steel and aluminum market, even if that undermines other manufacturing goals, right? I think we can look at, this has been one of the most protected industries over many, many, many presidents. I think we see the most insight from the U.S.-UK trade deal. That's maybe the most developed and public one we've seen. And then in that agreement, there is, I think the U.S. is moving towards a sort of almost quota system of a certain volume of certain types of steel products could come in either tariff-free or at a lower tariff level. But there's a lot of details that aren't there yet. I know that there's been talk about doing that with Mexico and some of the USMCA countries. You could see sort of Bahrain or even the Emirates trying to sort of come in that way. One, it's not directly related to aluminum, but I know that one of the deals I was watching that was sort of signed or, put in the fore during the president's visit was one with one of the Emirates aluminum companies, this idea of using the byproducts of gallium from the aluminum processing perspective. So there might be some, again, not a lot of details there, questions about the economic viability. So there might be some ability to trade. But, what I'm hearing out of the administration is, if anything, they're going to be adding products that include steel to that list. And we've also seen, I think, the government put more protection on with the Nippon Steel, U.S. Steel acquisition, the government sort of willingness to use what has been called a golden share. This is definitely a highly protected market. So I think countries like Bahrain would probably need to make the case of why there were sort of strong U.S. interests for some sort of an export, some sort of a waiver. But this element of quotas, and the like, I think would be where to watch. There are also, what I didn't mention earlier, but I think is relevant on the tariff side, is that the reprieve between the eye-poppingly high tariffs on China did reduce the chance that countries in the Gulf and elsewhere would be places that would be used for tariff hopping, right, and repackaging of materials. Now, Southeast Asia in general would have been better positioned for that. They were part of a China plus one strategy, but I know there was a lot of chatter right after Liberation Day about whether there were 10% tariff locations that could be used as transshipment ports and the like. All of these policies mean a lot more regulation and proof about rules of origin and arguments about U.S. content. It's all become a lot more complicated, which is why I'm glad I spent much of the last 10 years looking at sanctions and export controls. Anyway, I digress. But so that's what I think is happening on 232 on steel. But then there's also pharma. There's a lot of other ones coming through the mix, but I think for the Gulf, the steel and aluminum one is probably most important. The pharma will be very important for Europe, I would say. I think others may have things to say about currency. My sense is that there hasn't really been a big move away from the dollar. Gulf sovereign funds, some are more exposed to the dollar, some diversified a little bit more, but it's hard. The U.S. market, despite challenges, and I think is still the biggest, most liquid capital market. And so it might make sense to add a little bit more gold to portfolios in a region where gold is an asset people like. But I just don't see a lot of evidence that there's a tipping point. But Rod and Tim may have other things.
I wasn't sure whether the question was broadly on diversification away from the dollar or whether it was on oil trade and the dollar, because I think in the oil trade, right, there have been cases of, non-dollar settlement. Not, any significant portion. In my view, it's very unlikely you're going to see much of a move away from the dollar as, the oil settlement, but.
My sense was with the sanctions imposed, before that, Russia and the BRICS were trying to move away. And so now, was that happening under Biden, and was that happening less under Trump? Because there certainly is a de-dollarization, but the goal is, oil is very critical as far as maintaining the dollar as a reserve currency.
So, I think there have been settlements, right, particularly with China, where it has not been in dollars. But I don't think that that's a particularly significant part of the overall market. And to be honest, I think the talk of moving away from the dollar more generally has been around years, right? And if you look at IMF data, particularly on where foreign currency reserves are held, it's not really switched, I don't think, over the last 20 years, if I remember the data. So, yes, there'll be pockets here and there, things swing year to year, but my sense is that it's not moved in a significant way.
Rod, did you have anything to add?
No, I think the notion that it really matters for the dollar as a reserve currency, what the oil markets do, sort of overplays how much trade in oil amounts to for sort of international trade more generally, and international trade is still dominated by the dollar. I think that there are a couple of things that, if you were looking over a 20-year period, maybe would change things. One is demand patterns. So at this moment in time, if you see more demand growth and more relative demand in Asia, and particularly sort of, China's always the one that's looked at. The flip side to that is, the prospects of demand growth in China, not sort of plateauing of demand, but demand growth in China for oil over the long term is, the outlook is probably bearish. The Chinese may hit peak oil demand faster than any other major economy. So that's one thing. The other thing that will play into it will be sanctions. If the US, that has always been the issue that has upset people. It's less the sort of the dollar is there as a reserve currency. It is the fact that it can be weaponized. And I think that, if you saw far greater tension between the United States and China over time, if that extended to other sort of oil demand centers over time, then maybe you could see some sort of a shift, again, just to avoid the weaponization of the dollar. But there's nothing significant right now. Watch the Chinese. But as I say, the Chinese lose leverage every time their oil demand growth number goes down.
Yeah, just to wrap that up, it was interesting to see the language coming out of BRICS summits and gatherings, especially as the group started to bring in a number of Middle East and North African countries, including Gulf countries, Iran, UAE, and trying to get others. The Saudis are still sitting on the fence. I found it really curious that some of these allies and partners of the U.S. were attending these summits where, at least for a short period of time, the kind of main talking point was kind of how do we move away from a international financial system dominated by the dollar. But so from time to time, we've seen these questions come up, like to what degree are Gulf states actually going to kind of support that process here or there? And I think, as to echo what the panelists said, haven't seen a lot of that yet. I mean, sovereign wealth funds still heavy exposure to the U.S. assets. Currency pegs are another important one. From time to time, people talk about moving away from those currency pegs or the dollar peg to the dollar. Haven't seen movement on that. Oil sales, barring a couple of small examples of maybe settling some small sales, hasn't really happened. I think where you've seen a little bit more activity is in the less significant and consequential realms like currency swaps, which so there's some activity there. So I think we're still waiting for a serious indicator that Gulf states, that government officials are taking steps that would actually move the needle on that front. Any other questions? Okay, I have. Oh, please.
I've got one for Tim. Tim, you talked about Saudi Arabia.
Can we? Okay. The microphone there. There we go.
Sorry about that. I wanted to ask Tim, you talked about the Saudi PIF and the budget being quite overdone these days. Couldn't they do another Saudi Aramco IPO round and raise a whole lot of money?
I mean, they could, right. I guess the question is, what would be the demand for that, and ultimately, where would the money come from? So, I think if you look at the, amount of Saudi equity that's held by Aramco equity that's held by international investors, it's maybe like a third of the 2.4%, right? So more is coming from domestic investors. That might help in terms of the, sort of giving them more funds for investing domestically, less clear it's going to really help in terms of foreign investments. So I think, yes, they could do it. But I think, as somebody was saying also this morning, Saudi equity markets down quite heavily, oil's down. It's not easy, probably. If we're at $65 a barrel oil or lower, it's going to be a less attractive investment than it was during previous IPOs. So I think, yes, in theory, but I think, at the moment, it's probably something that is, I would say, not top of the mind.
Great. If there aren't any other questions, I've got one more question that I'm going to pose to all the panelists here, because each of you have a slightly different perspective. I mean, Rachel, international and political economy and trade; Rod, energy; Tim, kind of strong macroeconomic and Saudi focus. There's interesting diversity here of perspectives. And I want to get your views about China. So I teach a class about China, Middle East relations, and we always say in the class that the U.S. looms large in China, Middle East relations. So I think for the purposes of this conversation, China looms large in U.S. Middle East relations. So, I mean, from your particular vantage points, and to wrap up this conversation, how do you see China's role in shaping relations between the U.S. and the Gulf, in the years ahead? And of course, there's a strong energy dimension to this, but you don't necessarily have to go in the energy direction. Who would like to kick things off?
All right. Apparently, I've been volunteered. Look, I think from an energy perspective, China, I mean, despite what I said about the potential for hitting peak demand, China is a massive energy importer, and it is one where Gulf states, particularly the Saudis, have already made strategic investments in capturing long-term demand, as we look out over decades rather than years. And the thing to remember in terms of Saudi Arabia, the UAE, to a lesser extent Kuwait, is it doesn't matter if the IEA's doomsday scenario, or sort of good scenario, depending on how you want to look at it, whether you're a producer or a consumer. It doesn't really matter if oil demand falls to 30 million barrels a day, 25 million barrels a day by 2050, as long as you are capturing as much of that market share as possible. And I think what the Saudis are looking at, and to a lesser extent the UAE, but where they'll get to, is this point of capturing that demand and making sure that the last barrels sold are their barrels, and betting on sort of the nature of the market to ensure that prices don't crash. And if you're looking at it from that perspective, then China is going to be vitally important. So you've made the bets there. You believe that the long-term demand is there. You certainly think that the long-term demand, even if it isn't for transport fuel, will go into petrochemicals, etc. So there is a strategic alignment which gives China influence. So from an energy perspective, I think that's important. And the Chinese are willing to invest in the Gulf. The Chinese have been willing to, they have a different investment model. They have a different investment approach. It's one that potentially makes them more attractive, at least when you look at top-line terms, maybe not if you look at the full value chain. But it's one, and they don't necessarily come with some of the baggage that other investors bring with them. So I think, from an energy perspective, that relationship is going to be enduring, and it's one that the Gulf states have already made, sizable investments in, and therefore will look to perpetuate those investments moving forward.
Who wants to go next, Tim or Rachel? Well, Tim, why don't you go ahead, and we'll let Rachel just bring us home here.
Very quickly. So, I mean, I think outside of the energy sphere, right, I mean, obvious areas, China's heavily involved in construction in Saudi already. That will continue with the Vision 2030. A lot of effort's been going into attracting Chinese tourists to Saudi Arabia. So that's another area. Alternate energy is already, happening, I think, with Chinese companies in Saudi. So I think there are many areas where China will increase involvement. So I mean, I think again, this is from the Saudi perspective, it's the more the merrier, right? They want the US investment, they want Chinese investment. They'll have to sort of work the line between those in some areas. But they are very much open for business with people who can bring value to Vision 2030.
Yeah, second all of that. I guess I think, to add something more in this space, I guess to say that, of course, China, both as major supplier, the last panel, and to some extent, I think, highlighted this element, is commitment to renewable energy technology. China as major producer of all of those technologies. So I think they're important both as a supplier of components, but also as a buyer. China, unlike some other countries, has really tried to maintain a diversified portfolio of where they're getting their oil from. Including even in the sort of, from countries in the region, right, trying to avoid some of the challenges that maybe Germany ended up in, and maybe India has gotten itself into, though, vis-a-vis Russia. I'm also conscious of the fact we now live in a world where shadow fleets and shadow transactions are more part of how energy gets to market, and that has implications for, Maya's question earlier on currencies, even if there hasn't maybe been a big shift yet. But this sort of subterfuge kind of, piece, and China's indirect or other sort of involvement, I think is going to be something with us. I'm sort of interested on that broader currency and other trade side and energy side, thinking about where India goes in terms of its supplies. I mean, right now, natural gas is too expensive to displace coal in a place like India. But from a Gulf perspective, I think there's that question mark of what elements of U.S. policy open up or close down certain, bilateral trade relations as sort of things to watch.
Great. Thank you very much. I think that brings us just about to the end of our time. Rachel, Rod, and Tim, thank you so much for joining us on this panel, and I'll turn it over to Ambassador Silliman.
Well, this brings to close AGSI's 11th annual Petro Diplomacy Conference. It has been a pleasure to have all of you here. Again, I want to give special thanks to Genel Energy and to Gulf Sands for helping to make this conference a reality. I want to give special thanks to Paul Weir for bringing a little bit of soil and some good Scottish quotes, and an entirely different pragmatic approach to the question of energy, where we were not talking about macro financial issues or geopolitics, but the way that things get done on the ground. And that's one of the things that I think often gets lost in conferences like this, as you're talking about billions and trillions of dollars of investment. How do you actually get the hydrocarbons out of the ground? How do you actually get the nuclear plants built? How do you actually make sure that the energy gets to the people who need to use it? And a special thanks to everybody who braved today's heat in Washington to come in person here to the Army Navy Club, and to all of those of you who have watched at home. We really appreciate you coming to us to learn a little bit more about the Gulf. We style ourselves as the first place to go when you want to learn about the Gulf. It's what we cover extensively, we cover it deeply, and we do not only geopolitics and energy, we do societal changes, we do sports and arts and culture. So we are the one place, certainly in Washington, where you can come and get a complete picture. This entire conference should be available soon on our website, agsi.org. And until next year for the Petro Diplomacy Conference, thank you all for being here, and have a good and hopefully not too terribly hot afternoon.